Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and we're here on April the 11th of 2024, and we are live, friends. We are live, and it looks like that news release really pumped that right back up into that yesterday's regular trading hours gap. See that? That was huge. A little late getting started this morning, so I'm going to try and get through these charts real quick since I recognize that we're even on here. Are we up and running yet? Yes, we are. There. And Christian is burst through the door this morning. Good morning, Christian. All right, let's get to this, Christian. It's you and me, brother. Have a little slurp of coffee. All right. I'll get back to the other one, NASDAQ, in a second. Let's just look at what's going on here. 8:30 news release. We've pulled back into this wick candle here, so I'm liking all the way up to 52.56, or at least 52.47, 52.45. That's what I'm looking for this one today, 52.45. I'm going to put some lines there. I'll just put one of these guys here. 52.45. So 52.45 to, I guess, 52.64. Full fill of this. 52.59. Keep your eye on that area. There to 52.64 for upside today. We may get there before 10 o'clock. I don't know, but if we get there and start to retrace back down, look for this breaker here. So either support price or blow through it and continue down for these equal lows here. Still like this objective here for next week. Like roll over and still dig down into this here. I still think we're coming down for April. And then the run back up from there. Dow Jones, look for a return back into this fair value gap below a body. These equal lows here. Look for a return to that and then peel off and either come back down, or we're going to pull back deeper into this range. If we get back into this and above it again on a close today, look for a run back into the middle of these two again. But right now I'm bearish on Dow. We come back into 33, 38, 888, around that area. To 38,940. I want to see, I'd like to see this stay open, continuing on the downside for Dow Jones. Dixie, look at that sucker, just ripping against you. Every time you think it's going to go lower, it just tears up higher. That's going to put more pressure on downward pressure on gold. So we have a return to 109, 109.8, 109, 104.969. These old highs here. Look for a potential pop right off of here inside this breaker. So I'm looking for this breaker to provide a level of support, even if it's just that where it's just hit right now, and we start to reverse and continue higher on the American dollar. That puts downward pressure on all these guys to continue taking these lows out here. So if we're just coming back into this level, yeah, this is your potential reversal swing right here with this fair value gap. Taking that low out, come back inside this, anywhere inside here, all the way up to here. You'd have to give that a bit of slack there for sure. And that breaker here, those two-day breakers probably going to give you a lot of support. So yeah, definitely see more downside on these guys. We might get a decent pullback in here today, but if this fair value gap is any indicator that we're going lower, now that we've broke this one, and we have this one overlapping over the top, I'm looking for this to continue going short. If we do get a pullback up in here, look for this whole breaker. That's your breaker right there. And this is the fair value gap you want to kind of look for. Let's just start moving this one over. Now we'll get rid of these guys. So using something more recent. This is a breaker here. Look for this one. If we get support off of this, this would be great. If you want to continue down to the downside and start digging into this inversion one more time, take these lows out. CAD, my God, we're paying big bucks for American dollar right now. It's good if you got Canadian or American stock. For us, we're getting some the American dollar's getting us a long way. If we bought American dollar a long time ago, we're starting to get some value back out of it. It's kind of good for some. Got a lot of a couple of ETFs that are American stocks, so the dividends will be nice. I don't have much other than a return to this old high here. And then a continuation to the upside. If we blow through this high, look for these equal highs all here to provide support. I'd like to see that stay open and continue higher. It's going to go higher. This is contrary to what the American dollar is doing. So if the American dollar is going higher and the New Zealand dollar is going higher, that's out of sync. So unless they're just coming back to an order block premium inside this range here, and then roll this over and just start booking it down, it's out of sync. It's, yeah. Look for a turn to this line right here. We can start digging through these now. This is a breaker to breaker run. You can see it running all the way back up into this inversion here. It's an inversion. It's an inversion. So we could go from a discount back up into a premium. We'll see how this order block holds price. It is a breaker, so it should hold price. Again, this is going in the opposite direction to the American dollar. Okay, so the American dollar's definitely done a full pop above there. It's really grabbed all that liquidity for sure now. On that weekly Japanese yen. I don't know why my mind's just not in this morning. Nothing. I got nothing for oil on daily. Back to the breaker. We're kicking off of that. So we're going to get through this candle's mean threshold now on the 15-minute. This is going higher. See how we traded above this breaker here? And then we traded back to the breaker, and now we're going to continue going higher. So you could go higher. Keep in mind you want to see this one give way, this fair value gap here to give way. Look for this imbalance here on the 1 minute, and then look for these equal highs above you. This could run all the way down into here. This would be an interesting one to kind of watch. See how we traded above this swing point here? How we traded above it right there, returned into it here to go long. Start paying yourself at these highs. That's where you would have just, for the last 2 minutes, or those 2 minutes, 3 minutes, you would have made yourself some quick money from there to there on your swing. And this swing got broken to the upside the moment we cleared it out right there, for me anyway. If this rolls over and comes back down, you'd want to see it get below this level, pop back into it, then you're only trading between there and there. So I'd wait until you get a better setup. If the American dollar continues to go higher, that should start putting pressure on this to start pulling back into this order block here. Mean threshold still available as a PDA. Same with the silver. You want to see it break the low of this fair value gap here, this BISI. There's a small one right there. You want to see it break to the downside, come back up into it, then you can get short on copper. What did I outline there? What is that outline? Oh, that's the consolidation. Okay. So there's your CAM Model 1 entry. I wouldn't go with a CAM Model 1. I'd probably go with a CAM Model 2 entry, just because you have a fair value gap here. If you do go for a CAM 1, if it closes below you, come back into you, then you can get out and wait for a Model 2. Either way, your stop loss is going to be way down here, so you have to have really low leverage on that one. For palladium, people are like, why are you still doing palladium? Banks on the tanks. TD, Laurentian Bank. Oof. Well, Gary, I hope you're getting an opportunity to get in some more of that. If you're in that, my friend, you get to buy more long. I definitely see this coming back into, for my Canadian friends, if you're into banks, reprice rebalance. Is it a reprice rebalance? Yeah, I'd like to see that get back into this order block here. At least right here, off of this lowest down close candle. Its high is equivalent to this candle here. So I'd like to see that one come down to 26.51. ETFs, if you're into ETFs, Canadian ETFs, AGNC, oh my God. That's the One America one I was telling you about. It's just crash. I've been holding that for years now. It does pay a really good dividend though. All right, what else we got? Bitcoin. Look at that, it just doesn't give you your swing yet. Doesn't give you your, you could say that's a signal for it, I guess. And the moment it breaks that high right there, you'd be out. Well, I'd be out anyway. And you don't get the reversal until body closes below. You don't get nothing. No, there's no chance for a decent reversal there. If you kept this one, had your stop loss sitting up here and just left it there, then yeah, I guess you got one. But your fail safe, if you use my fail safe idea, you'd be out right there. And if you waited for the next candle to bring you down into break even, you'd be broke even and you'd be sitting on the sidelines. There's some awesome little, I tell you, Bitcoin, people may not like Bitcoin, but I tell you, it's got some amazing setups if you're looking for them. There's one for right here, for example. Here's your swing point. Body returns up above it, and you come back into it, catch your long, and you start paying yourself at these highs inside this range. Pull your fib tool on the range and scale out, whatever you want to do. It works just delectable. And we have a large candle that rips through 1 and 2. You trade the second one. Here's your second one. So you get short on that. Here, aiming for your order block down here. This little pockets fill. You're trading from one premium array to the second discount array, all the way into the bottom of it. Look at that, right to the bottom. And if that's where you want to load on again to go long, there's your second opportunity to go long. It's beautiful. Look at that. Those are huge. Anyway, New York Open. Let's get back to here. And let me say good morning to all those people who have turned up this morning. How are y'all doing? Christian, Lambo, Carbor, good morning. Fernando, good morning, Fernando. Lewis, how are you doing? Have a great day, honey. Love you. Derek, my main man. Good morning. Dave Barry. That's a man dedicated to study. Love that guy. Naz, good morning. Simo, good morning. Lots of sell side being put in on the US dollar. Good morning, family. Good morning, Tommy. Gita. Good morning. Gita is new to our channel. Excellent. It's this. Is that your sister, Simo? Was it Simo that brought Gita in? I can't remember. But welcome, Gita. Welcome. So this little reversal was kind of I saw this one this morning above that 50% range. And I thought, ooh, I could catch this little reversal. So I caught this right here on that reversal. And then when I saw this one forming here on the other side, I thought, ooh, maybe I'll get out. So I got out. It came back in for another opportunity. So I took a short again and came into, I think it was somewhere in here, got out. I tried to go in for a third time right here. And then I saw it trade above me and I was like, I'm out. So I closed it out right there at that spot, and it would have taken me out anyway. So that's where my fail safe worked quite well. And then it continued to the upside. So here we go on this lovely, there's no reversal in here. I see no reversal. To the open. Look for this guy here. Did we get it? No. Look for that breaker right there. If we return to that breaker, well, there it is right there. I'll go short. Or wait for this fair value gap to finish, come back up inside the breaker one more time. That's your 2022 model entry, and then continue short. So let's just wait and see what happens on this one. Because if they're just running liquidity out here to push this higher yet, there's the fair value gap fill. We do have bodies getting below that. I'm going to put my stop loss right up in here. I'm just trading off of a body breaks these lows. Now we're going to trade above it, so now I'm wrong. Wait for that to come back in and give me an opportunity to get out. Right there. Now you can go long. That's how you're on the wrong side. We've got a swing here. Body breaks the high, come back in, go long. Stop loss will go down here. And again, it should not get taken out. If that we have a body joint below this again, comes back into it, then I'll get short. So I've made back all my loss already. I'll move that into break even. Pay yourself there. Get an opportunity to get back in long again. Ugh, I didn't take it. Didn't quite come back to me, but that just made up for that little, I was on the wrong side of that. You see how it was on the wrong side? And then as soon as it broke that high, it went, closed out, got back in right away, and then went long. And then made the money back for just offsetting that. But that'll be going long now until we get something on the downside that shows us a swing. Pay yourself at rejection blocks. Max, good afternoon in Sweden. Jack Sims, good morning. And Simo, yes, it's a sister. I like this brother and sister combination. Enjoying the markets. I'm going to go long on that one right there again. I'm just going to keep trying to trust my algorithm here. And if I'm wrong, I'll just let it, I'll close out my trade if I'm wrong. And then I'll pay myself at the top again. Don't like that. Yeah, I don't like that. I'm gonna get out of that one. I don't like the way that's the candle's acting. We should be just tapping this and then starting to leave right away. The fact that it just kind of waffles there, I hate that waffling. So it tells me that there's potential for it to keep coming down, but it could be just bouncing off that 50% line. See how sensitive that area is? And notice I did not use my fail safe or anything. I'm looking at the candles going, man, I want to see you snap off there. You're not doing that. My gut tells me I don't like that. So I'm going to go with my gut on that feeling. If I'm wrong, I don't care. All I'm trying to do is just show you a quick little ranges that you can try and jump in and out of. Not that you have to trade these. It's more just the study of price action with entries. No bodies closed below it yet. See that? Too much waffling in this area. If you want this to be the swing point and you want it to go, then go. This is a reprice rebalance. So if we would have taken that high out, I would have been more interested in this as a potential swing. But you want to see a body break above it and then come back in with some more significance. Like you want to see bodies get up there above these highs, right? So I wouldn't consider that a swing point, really. There's no swing there. So you sit and wait. We'll wait for something to turn up. See, it would have taken my stop loss. Didn't feel right. So you want to just see it come down, snap it, and then that's a clean one. The one you want to see it take off right away. And if it's not doing that, you've got to start saying, look, I don't want this. I want you to react off of that. And I want you to act my way, not me just going, well, I'll just kind of giving in to whatever the algorithm's doing. If you're not snapping off the way I want you to, then you start getting curious, pulling your stop loss in, or you just say, I'm out. It doesn't feel right. And again, we've been trying to preach, don't worry about feelings. You shouldn't be focusing on feelings. But if you watch these candles long enough and they're not acting the way you want them to act, get out. My stop loss would have been taken for sure. But that's staring at the candles. And those of you who do not sit here, and Michael said so many times, you got to be in the charts. You got to be studying them over and over and over again. And if you're not, you don't develop a feeling like that doesn't feel right. That would have come down just enough to take me out. So you want to see these nice snappy rubber band kind of hidden areas snap off of it with intent to go in the opposite direction. So look at that upside candle there. You're inside this little range here now. We're just going to validate this candle. Now you're really in this tight little zone. So now you've got to act off of here, come back into here, get some support. If you push through here, that becomes a senior array, and it's inside another senior array. So you take the bigger one. Keep your eye in this area right here. You want to see some sensitivity in here? A big traumatic bandage has now been reduced to one little bandage. It's a big chunk out of my fingertip, or out behind my fingernail, but I've just managed to get the Band-Aid to cover the whole thing. This guy's came in yesterday. Literally, the guy came in the day before, measured everything on the countertop. They cut it and was here within 24 hours, had it installed, and were gone within 24 hours. How many of you guys can get your kitchen cabinets, your countertops just measured and cut and put in within 24 hours? These guys are like, don't tell anybody we did that, because we're not like that. We never do that. It just happens to be that we're in your area, so we thought we'd rush your job and get it cut and done. It's like, oh, that's great. Go for it. Yeah, they came in and ba-boom, they were done. Now I want to see a reaction in here. I got to push right through this now. I wanted to see this react here and give us a higher retracement. This little snapback, I was expecting to see it come back up here a little higher. But this is a better sign here now. Kind of keep my eye on this little area right here. We'll just watch it. No trades. We'll just kind of watch it and see how price acts there. We've got 9 seconds, 8 seconds to see if we want to close below this. Good. 2, 1, bing. Okay, now come back in there, kick off of that, start coming back down. Where's my carrot? Where's the carrot? I don't want to work. I want to bang in the charts all day. Remove the drawings. Let's put a carrot in here. Let's give this thing some motivation. Motivation. I want to bang on the charts all day. So there would be like a pretend thing up here. So here's your opportunity now to say, okay, now I need to use my fail-safe. So you're watching, your stop loss would be here. Is it going to run you right out? Definitely on the wrong side of this now. And you're almost out. It gives us an opportunity to get out of a trade right there. Right there. Click. Now get out of your trade. So you how you break even. Didn't take your high. And if it rips through here now, just say, who cares? You're in a consolidation. It wasn't clean enough. You want to see a significant high get taken out, obviously. We're just looking at that this area did it give us something we wanted? We had a pretend trade. It was like not even paper. It was like pretend paper. give you an opportunity to go a little short, and it took you all the way back up, almost took you out right there. That high is 63.75, and this is 63.25. So if that spread, which is 25, did not take you out, if it did open up to 50, it would have taken you out. If it stayed at 25, you would have still been in for an opportunity to get yourself out at break even. It either would have taken your full 1% on it. So now you see how this little area, we traded through it on this side. Now we're gonna, if we close above it, you're long, you're short, you're long, you're short. Inside a consolidation, inside a range, discount array, premium, you know, but maybe that's closer to equilibrium, standby. Yeah, it's right on equilibrium. So it's just in the discount range. Hard one to play with, especially inside this whole range here, from here to here. This big down close candle body here pretty much makes up the whole range. And this, all this stuff's kind of just banging around inside it. So not a great place to trade, obviously. So short, trade, we close below, come back up inside. Now you want to see it start to head for the carrot. Equal lows. Yeah, there's lots of equal lows down there. We're just sitting here waiting for, is there like a news event coming up? I didn't even check this morning. $10 FOMC. We could be waiting for the FOMC speaker. Next 10 minutes. That's why we're going sideways. Waiting for some reaction. So if we do, look for yesterday's, oops, put this back on 1 minute. $18,342. So what I'd like to see is see a swing below this, create a reversal, and aim for up here. Because we're above that 50% mark on our gap from yesterday. Let me just make sure that I've got that gap still lit up here. I don't want to work. Magnets give me a bit of a pain in the butt. I don't know why it's not turning up on these lower time, or these other charts. 245. So we'll just kind of wait and see. We're stuck really between which candles are we in? Still inside this big monster right here. We've really eaten through that whole candle. There's really nothing left of it. The mean threshold's been demolished. So we really have this up close candle and this candle here. So the wicks are respected early. Then we start to dig into the body right here multiple times. So now you're expecting the body to get tapped one more time, making some engineered equal highs, or you want to see that mean threshold start to get attacked. So inside this candle here, equal highs. Look for that mean threshold there. Arbor. So funny you talk about Michael being in your head and talking straight to you. I look back and, and have to laugh. Yeah, it was bizarre. There was times I was seriously looking around my house for cameras. I was like, how could he be in my head right now? How could he know it? That's exactly what I was thinking. It's good that he remembers. So probably from all that journaling he does, that he remembers the psychology of what he was thinking when he was making his trades and what was. And I love the way he phrases that when you journal, be kind to yourself. Really be kind to yourself. Because if you beat yourself up, and I totally know what that feels like, it really ingrains in your neurology some really negative pathways that you will just keep firing off and firing off. If you ever watch Tony Robbins talk about this thing where they tie this monkey's fingers down and they get it to twitch its finger, they feed it, or they stimulate a part of the brain, which is the arousal zone of the brain, and the monkey just twitches his finger, and they stimulate this pleasure center of the brain, the hypothalamus, and the monkey does this and just does this and does this. Then they stop stimulating it, and the monkey just continues to do this. It just looks for that reinforced behavior over and over and over and over and over again, right? And then they give it a negative stimulus, and the monkey's still trying to fire off that positive stimulus over and over and over again, because you set that neural pathway inside your brain. So once it's set, it's very difficult to kind of break. So you have to be kind to yourself every time you journal. I completely believe what Michael was saying and support that whole idea of you got to be kind to yourself and how you talk to yourself. What's your self-talk like? If you have negative self-talk, you beat yourself up. You say, I was this, I was that. All it's going to do is just give your unconscious a reason to look for more reasons why you are acting that way, or you should continue to act that way. Look for situations that reinforce that neural pathway. So it's really interesting that Michael actually journaled that in his journal entries and remembers it and actually could tell you very clearly the things that you were thinking about. So I love his, I wish he would write a book on the psychology of trading in the markets, because I think he really has it down. I think he really understands what the beginning trader goes through, and the fact that he can remember that after 30 years tells me that he had some really traumatic moments. If he can remember that vividly and that clearly, and he has a revivification, like we call it in hypnosis, when we revivify something, you relive it. The fact that he had that experience so intensely tells me that he's had some pretty big doozers, like emotional. Like he said, he used to say, I don't know how many monitors he's put his fist through, how many windows he's smashed, throwing his monitor out the window, having to get new window frames. I've never gone that far because ultimately I'm cheaper than my anger. So I'll be like, oh, I would smash you right now, but I can't afford a new one. So yeah, I really think that's kind of awesome that he can create that kind of psychological recall. It's amazing. But you can also see why he's got those opinions about people on the internet, you know, screwing him over, family members that weren't there for him when he needed them and didn't believe in him, fought with him. And you can see why those are pretty intense emotions for him, and why he's so strongly opinionated, or has such a strong opinion about other people and the support that they gave him in the past. So it's unfortunate because it's not true for everybody. But the psychology he talks about is pretty much true for most people, which is interesting. So here's the 10 o'clock. So I'd like to see this high get taken out. 10 o'clock, create a reversal. And we're all looking for this to fill. This may not. We may just get up into that 75% of that range and start coming back down. Looking right here. See this reversal here? There, I guess there's one up here. Oh, if we break this one, then obviously we got more upside, but this one here, you're really between this one and this big monster here. And we still have more downside. That is really throwing people off on the daily. People are expecting those lows to get taken out, and it just keeps ripping it back against them. So all those people are still trying to go low. They are just smashing them over and over and over again, to the point where they will just be so afraid to enter into something, and then it will slam down. At what level it does that, who knows, right? We got anything else going on? What's Bitcoin doing? It finally did go lower. So if you're still in this one, Bitcoin is, boy, did it ever pay you there. Did it ever pay you monster dividends? If you were in that one short and it came back against you, and my fail safe would have taken me out right there at a break even. Stop loss sits up here. But look at the pay. Look at the payday that would have given you. Dang. If you could have endured all this and just kept your stop loss there, smash. Even this reversal right here, this one here, you get one opportunity right there, right at that precise moment with zero drawdown, smash. Right off of there. It just paid you some beautiful, beautiful divvies. Did not trade above here until here. And it didn't give you an opportunity to get back in again. And it didn't take a second one out with one candle. So you have to take that one. If you don't get it, you don't get it. But man, there's some doozers. One right here on the way up. Reversal. As soon as that reversal happens, you get out of your trade from that long to that short. Wait for the next one to come back down into this one. This one goes higher. As soon as you see that reversal happening there and you get back out at your return to here, so that's your max profits this way, then get short off of that one. This is the second one down because one candle took out both. So second one in, you get short, take this guy out, take that guy out, aim for this first one that started happening all the way back to the breaker. Oh no, that would be the mitigation block. Give you one more opportunity to go long. Stop loss goes here. Look at that, body's respecting that nicely. And then off. Man, they're so clear once you see them. And then seeing them in hindsight. But when you see them when they're happening live, you go, oh my God, do I trust it? There's an interesting psychology. Do I trust it? Even though you can see it happening over and over and over again. Having that fail safe is that extra bit of protection that you can have to keep the brain happy, saying, I feel safer with a fail safe than just relying on that full stop loss getting taken. Oh, look at all that. Look at all that up stop there. That's a lot of cheddar up there. A lot of cheddar. As my friend Gary would say, there's some cheddar. How does the kitchen look now? A freaking mess, my friend. It's like when you finally get countertops put in, it's amazing how much crap you'll instantly put on the countertops. I think it was sitting on the floor, it was sitting on the kitchen table, it was all over the freaking place. So now it's like you suddenly have this massive countertop space and you just want to pile everything on top of it. So yeah, the whole house is just a whole downstairs is a mess right now. We still have I'm just ripping off tile off the wall so we can put backsplash in there. We're out chopping up stuff. The floors are going to get all torn up next week. And then, yeah, it's just going to be a mess. Crazy. All this is because my cousins are coming over from England on this summer. So we want the house to look good for them when they get here. They won't care. They don't care about the house. They're just here to see us. But it's like 1980, this place. It's got that old oak appeal to it. You know, the oak trim. Everything was oak trim. And carpet, shag carpet. We got to upgrade. So with figure 44 years, it's time to upgrade the house. Is it the CE of the bear leg 16.245 of the bear leg? This is probably a while ago, Naz. Sorry, I missed your comment a while ago. You were probably mentioning some leg in here somewhere. I have no idea which leg you're referring to now. Sorry. Good morning, Russell. Morning, Tristan. I broke 2 monitors in broke 2 monitors. I imagine they weren't done with oh, they just fell off my desk. They were encouraged to fall off your desk. Is that how it went? 10 a.m. Here we go. Here comes the news. Hi, guys. A bit late. Paul, you're never late, Paul. We're always happy to see you, buddy. US dollar still going up. Filling the daily fair value gap, US dollar. Boy, the algo is loving these ranges. Good for you. It's not a swing, but see, like, watch this. So how we broke down below this spot here. It's not a swing though, but it still respects it. Look at that, right to the money, and then we're heading down. I'd like to have seen this happening up here. We could have caught this, but I'm not touching that. This is just using the fair value gaps as inversions and saying, well, all the time we're on the opposite side of the inversion and I can find support at it, I'll continue in that direction. So that tells me we're going bearish. And if we climb above it, then you go bullish. And if you're inside the range, you start to say, well, as soon as this candle here gets traded above, it gets validated. Right now, it's not valid. Neither is that one. Neither is this one. These guys are the valid ones. So we're looking for support off of these to continue down. If you're inside that range, now we validated it. Oh, it's coming for the carrot. Should have got the carrot out of the way. Mean threshold, see that? Right there, snap off of it. Inside that small little range that you're in right here. So this is now valid. You're between these two candles here. If this gives way, look for the next one above, which is this candle up here inside a bigger range. So if you're looking at the bigger range, you're in a discount of that range. If you expect price to continue down, you want to see this provide a level of support. So that's how you want to think about the candle. Say, well, if I'm bearish, what do I need? I need to see this candle hold price at the mean threshold to continue back down. It could still come up to here, turn around and go back down. But something stronger is just, I need to see it kick off this level right here and start really pushing through the mean threshold of this one. I'm between these two candles now. So I'm either running down here to key off of this and run through that to go higher, or I'm running up to here to blow through this and go lower. So those are the two mean thresholds you're looking at to see which one gives way to the upside or downside. And to the downside, you have other objectives, order block over here, and equal highs above. Now, if you're all looking up here and you're going, that's absolutely going to get taken, you cannot confirm that that's absolutely going to get taken. If this holds price now and we get above here, then I say, yep, great. Now this is my objective. Then I say those are my objectives. I don't reach for super high PD arrays. I know Michael's really good at that. He probably sees it on a higher time frame. But looking at a 1 minute candle, I just tell you, these are the two we're between right now. So we've just banged off the mean threshold of that one. We've come down inside this one here. And you see how we've eaten through this one, right through to the, almost through to the rejection block. This mean threshold's holding nicely, comes back up, doesn't even tap it anymore. So you kind of look at those and say, if I'm constantly looking at these two and I'm saying, which one's stronger, which one's weaker? I've already dug into this all the way through the mean threshold of this thing, and I'm digging into it, chip, 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 chip. So that just tells me, am I just knocking on the door, the glass till it breaks, and then I start getting through it like that. Let's see. So that one holds, that one weaker, and that's how I watch the candles, and I go, okay, he's just knocking on glass here. When he busts through, great. That mean threshold keeps giving away. He keeps smashing on it. And if it breaks, and I look at that and I go, what kind of candle is that? Is that a breaker or not a breaker? Well, this one's a breaker. So that's a senior array. So that one's much stronger than this one. This one came up, mean threshold held. This one was banging on it. It was trying its best to hold, smash. Broke through it, came back up to the mean threshold again one more time, and then continued on the downside. That's how I look at the candles and I look at the price action as it's happening, and I try to evaluate what I'm looking at while the candles are doing their thing. And I go, okay, this is really putting some pressure on this candle here. It's not just tapping it and leaving. It's just hammering on it. Whatever analogy you want to use. Hanging on glass, whatever. So no setup. Return to a low. I'd like to see that run back up into the order block. Becomes a senior array now. This takes out a low, a low. $18,274. Oh yeah, that's all delicious. But see, those of you who are thinking that this was going to run back up there and take it out, you can't. You can't start overshooting your arrays. You have to look at where the candles are at right now. And I'm not saying they're not going to be reached some other time, just not right now. If we break this, now I'm bullish right there. So you take your little tool. Now that we've run these lows out and we've come back into this order block I was telling you about, look at that. See, that mean threshold is hopefully holding price. We can go down just a tad bit more. If that mean threshold holds price and then we get this right here on a reversal, then you start to look for what's a reversal above that I could have got that I want to key off of. You can either use one of two methods or three methods. One is just aim for those highs and hope you get them. Two is look at the range you're in, aim for each individual array, reach for the next high, reach for the next high, and just keep reaching for the next arrays as they go higher. Or pull your fib tool down in here, and as soon as you hit 50%, I'll show you. I will do it on this one here if it works. So I want to see a body get above here. And if it doesn't, it just provides us with a fair value gap that we've come back to. We've touched it, reacted off of it, and we're going to start pushing through this candle here, because now this candle is that what we were talking about over here. This is just a regular old order block. So we're going to tap on the door. Ding, ding, ding. There's the mean threshold. See how we're tapping on the mean threshold? Tap, tap, tap. Bust. And that did not give us our reversal. We're back to the New York open midnight candle right there. Look at your 1 hour chart. We're back to a breaker here. Is that a breaker? Do you guys consider that a breaker? I guess eventually, yeah, I guess there's no swing there. These are candles. There's no swing here, so you could say that was the breaker. And we're eating through that. There's the reversal to go higher. You're in that now, so I want to see this get broken to the downside on the hourly. $18,221. He liked this entry. There, like that return. So that was the run down below the low. Come back. He has a confirmation of a fair value gap that ran after this lows were taken. Another fair value gap forms. He likes to get in on that. And if he took that one short, Derek, you're on the money, my friend. Good for you. Now, are you just aiming for this breaker right here, this last down close candle before blowing out all these highs? If you're aiming for that on the 1 hour, you just tapped it. You got yourself some quick little, from, if you did a 2021 right there to that spot right there, 2021. Holy cow, that's like 60 handles. Now I want to see it really dig into Sunday's open candle again. I can get rid of this one. Oh, that's the 50%er. This is the 50%er. So watch right there. We'll come back to these equal highs, this little consolidation with the leg that takes out the consolidation if you're looking at it from that perspective. So look at that, or 50% of this candle here. Those are your three key levels to look for on the hourly. And then you look for a reversal to get back up into this order block here. We're starting to really work that fair value gap. So that hourly fair value gap will give you lots of nifty little opportunities to snatch 10, 20 handles out of this thing, if that's what you're into. Yes, well done, Derek. That's an excellent, excellent idea, man. Good for you. Dow led the way lower. Yep, that was great. I missed it, but learned to see it. So that's good. That's excellent progress, man. When you see it, it doesn't matter if you missed it. If you see it and you go, I like that, and then you find a ways to look for that, your eye starts to go, yes, I'm going to start looking for that more often. And before I had a reversal, I was pushing this stuff all the time. Every time we had a fair value gap, if it came back into it, go short. And before I had the fail safe, that would have been a great opportunity to go in there. 1, 2, 3, put your fail safe above. And if it trades above it, unload your positions because it's going higher. Like anytime you get to a fair value gap and you get through it and you want to come back to it, use your fail safe. That's a whole new trading style by itself. There's right back off. See how it kicked off of that New York opening midnight candle? Just tapped it, kicked off, reacted back to this order block here. Now where are you going to go? You're going to hit it one more time? You're going to drive through it, hit the reversal here. If they go through this with a body and come back into it, I like that for a reversal back up into that. Mind you, it's only on the hourly. Where does the body put us? So don't forget, we could have this is our reversal. We finally went, here's the swing point. We went above on the hourly. You've come back down inside it. Now to go long. And you see, if we break this on the downside, come back into it to go short. See how you've got one that goes long and one big one that goes short. So which one do you play? You usually trade from the lower one to the higher one, or from the higher one to the lower one. That's how I usually trade those, from a premium to a discount. Now they're overlapping. So which one do you take? Well, what's your overall bias? Go to your 4 hour, go to your daily and say, what's my bias? My daily bias would be, if I'm going down, I would take this swing here to go down shorter. If that's your bias. But if you're looking for this to fill again, then you say, well, I want this to go back up. I want to get a counter trend trade from here, run back up, take these highs and fill in that fair value gap. If that's your bias, then you got to look for confirmation on your 1 minute chart that supports what direction you want to go in, and then be prepared to change your mind really quickly if you're wrong. And you'll see it in these inversions. So it's a great way to find out whether or not your setup is right or wrong. So we're going to watch this level right here. And a wick doesn't count. I think the algorithms just comes back up and just going to sit in here now, wait to eat the carrot. Wherever we put the carrot, it just slowly starts, especially if it's off to the side and not below it, it likes to come back up, I think. Ding! Silver bullet time. Why is it silver bullet time now? It's 20 after. 9 a.m., 10 a.m. Oh, yes. Okay. This would be the silver bullet short. So here's your decision. Do you do the same thing Derek was just talking about? This one here to go short, So do you capture this one here? Because if we start taking this down to here, you start to say, okay, I can go short. Now, fail safe. If it doesn't work, watch. Watch right here. So if you're going, oh, I want to go short on this, and let's say the next 30 seconds, it closes above this, then you go, I'm wrong. We're going to go long. And if it comes back into it again, when it breaks this low here, then you're going to be, then you'll say, okay, I'm wrong. We're going short, but it's quite a big fair value gap. It'd have to come all the way back down. So you could see this bang, 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 bang around in here for a little while. So I want to see a big bold candle with intent to get through this, not just wicks. If this rolls over now and just comes hammering right back down again, those wicks were the attempt to get up there, and it didn't work, failing. Let me move the carrot a little closer so it's not highly motivated to go too much higher. Swing. So let's do this one. Let's do the Derek idea here. And I'm going to show you if the fail safe, if it fails, how we get out of this. So 12 seconds. I told you, it just wants to eat that carrot. So you want to see an intent. So, oh yeah, so the stop loss would go like right up here. So I'm on the wrong side of it. If this closes above that, it's on the wrong side of it. And the fact that we're eating through this order block right now is not a good sign for me. We've eaten through it. We come up to it once, ate through the whole thing, ate through the whole thing again. Not a good sign. So I'm going to move my stop loss right here because this is definitely not a good sign. But we'll wait. I'm going to show you that fail safe again. Yeah, it took me out. Didn't look good. So let's say we still got it sitting here. Let's wait and see, and I'll show you. 3, 2, 1. See how we've closed above it? So now you would wait for it to return into your entry point, being right there. Now you get out at break even. That's your fail safe. I just didn't like the fact that we'd eaten through it a couple of times. I thought, nah, that's probably going to go up higher. But it wants to eat the carrot, so we'll let it eat the carrot for a little bit. You guys are going to start to think that carrot's got some meaning. Was at the highs to the left, 18,175. Oh, nice. Way to go, Derek. Nice trade. Dow completely ignored the breakers to the left. Just drove through them. So interested to see if NASDAQ does similar. NQ has equal lows on the daily at 18,055. So in order to be on the wrong side of this now, if this is like, okay, now I'm looking bullish, I'm going bullish on this, you've got all of this to confirm bullishness. So it could come all the way down into here and still be bullish. If it breaks this high and then breaks this point here to the downside, I'd be saying, well, you're stuck between this guy and that guy. But right now, I'm bullish all the way down to here. If I break that low on a close, I'm bearish. Guess you could look at this almost like right here to here. We didn't take out a high, but keep your eye on this level right here. That's my honey. What? You get confirmation here. Just come back down, find some support at this, and we're going to continue going higher. Order block. Let me get this thing up here. So if you have 3 entries for a long, 1, 2, 3, the ultimate one for protection is this guy right here, right? So if you're going to use a theory of, let's say I want to go long on this, and I want this, you say, I don't care about all this stuff. I absolutely want to protect my money. So I'm going to go here, stop loss will go here, and I will put my entry in long right there. And if it drops below me, comes back to me, I'm out. But if it does go long and takes off, I've got maximum profits. I beat these two guys here. But if you're like, I don't care, I'll put 1%, huge stop loss down here. It's still 1% of my account, or 1/4% or whatever it is you choose to risk. And then you say, I'm going to go long from there. Stop loss will go here. And if it drops below that point, then my fail safe will kick in and I'll lose from this point here to there for my overall profit loss. See how we had this, we came down into this fair value gap here. It's kind of like what Derek was looking at here. We have this return to fair value gap. Body closes above. We've come back. We tap it one more time and we continue going higher. Now, how many of you thought that this was going to continue going lower? And you were like, no, Darren, you're full of shit, man. That's definitely going lower. Nope. This where it tells you right here, body right there. It gave you a little hint. Guess where I'm going to go? I'll give you a couple opportunities to get in if you like. All right, I'm leaving without you then. I'm on the bus. I'm heading for the carrot. You'll see it enough times and you'll go, okay, I got to start looking at it and say, is there something valid to what we're saying here? Is there something interesting up here that might draw price up on a reversal below an old low inside an order block that gave you, actually, no, that's below that order block now, isn't it? So we're into this fair value gap again already. And we're not even into the 50% of it. We're probably into 25% or higher. But we see a reversal happening here. About below all these significant lows, all this liquidity sitting down here. Now it says, I'm going to run all the way back up here, clean them. All these guys are going short. I'm cleaning them out now. Then I'll go short, or I'll just bust through all these guys again and run back up here. All these people that are dying to get short below all this lot here, they just keep loading on to go short, and they just keep coming back and busting them up. But you can see it happening on these reversals, and you go, ah, man, I love it. I'm going to keep working it. So if you did catch this one long right here, you're paying yourself at the order block above, so the first swing point. So you pay yourself at here, at the mean threshold, at the rejection block, at the high. See how you don't get the high? You get the rejection block, and if you didn't, and you're waiting on this, you're getting your ass, you lose it. That's all big lost profit right there. You must pay yourself inside the range. So let's just pull this fib tool here, just so you're looking at the first one here. You got in right here. You got in below. If you're like Derek, he likes this good discount, and I love that his idea about I want to find a discount. So if that's the 50% and that's where the reversal's happening, he goes, yeah, I like the reversal, but I still want a discount below 50%. So if he waits for his discount below 50%, maybe back at an old high, whatever, I don't know. Or he looks at this and goes, if it comes into there, maybe I'll get it long. But I want something below 50%. Okay, I'll take that. He takes that for a long, you scale out. As soon as it hits 50% again, you move your stop loss into break even. As soon as it hits 62%, you move your stop loss up to 50%. Then when it hits 70, and it didn't hit it here, but it hit it here, and then quickly started running. So you pull it up from 50 to 62, 70, 75, 78, 88, and if it runs all the way to the top, or as soon as you hit that rejection block, you scale out another, you push it right to there. As soon as it goes to the top, you just keep chasing it up behind it. And if that big candle just kept running up nice and boldly like it was, you just drag your stop loss up behind it. Every time it breaks the next high, you just keep bringing your stop loss up behind it. And if it whips back against you, at this point here, if you would have carried, I wasn't watching this candle at the time when that happened to really show you what it would have been like to drag it up. But if it continued to push up and didn't pop down and take you out, then by the time it got to your rejection block and you're at 88 and it ran up to the high, you pulled it right into the rejection block as soon as it hit that high, and then came down and went poop and hit you right there, literally opened up right there. Well, actually, no, it would have closed right on you, so it would have taken you out there. You maximized your profits all the way up. And now it quickly reverses on you, and you go, ooh, did we take out an old high? No, we didn't. We have equal highs here, and now we've got equal highs here. Are we going to leave that untouched? I doubt it. I doubt it very much. So if you did max out there, and it comes back into this range again, start the whole trade all over again. You've paid yourself. I call this buffering. You get to buffer your stop loss, which is way down here. You get to buffer any loss. If it starts to rip down against you, all the money you made on the way up here, you can use to offset the potential loss you could make here. Or you just move to the sidelines right now and you pocket your money and you wait for a better entry. Because this one here, even though, yeah, it's not it doesn't take out that high. So I don't look at that as a reversal potential. It just comes back. Its bodies are respecting it right there. And now we're reacting off of it again. So you want to see this mean threshold give way. Back to rejection block, pushing up for higher prices. If it doesn't, if this candle holds, if the mean threshold holds and it starts to dip down again, look for another return into here. It could be deeper return now into a discount array, like back into retesting this area here. So instead of taking your entry there, take one here or take one here. Not that I'm telling you to take that, but kind of look at those three areas. If we dip down in here, and then if we run back up again to here, you've really buffered any loss you could have taken in here. If it suddenly turns against you, you'll still walk out with some money if you're looking at 1% all the time. It's so that's using a fib tool to scale yourself out versus looking for specific arrays and then looking for specific levels inside those arrays. That's more of advanced PD array understanding And if you got it, great, use it. If not, something quick and easy is to use a fib tool. I try to give you 2 different methods there for managing that. Aaron, good morning. We got our silver bullet early today, but we're inside the 5-minute fair value gap now on this candle. That's probably a while ago. Sorry, Derek. Euro gave us a silver bullet, bearish as well today. Any seasonal tendencies we should be aware of? Yeah, seasonal tendency for this is a big dip down in the 2nd week of April. So I'm looking for 2nd week of April to finally take those freaking lows out on the daily. This, we don't get anything in here for the rest of the week. And then next week, we just get a slammer, one of these big slammers, all the way down into that level. That's the that's what I think is a seasonal tendency for this. And I'm going to be in New York, so I'm going to take my computer with me in case something good happens. There's some stocks I'm looking at for a perfect little entry points to happen during this little dip down I'm expecting in April. And then they're like really good dividend producing ETFs. So if we do get a little dip down in April and the markets do give us a little kickback, give you an entry to load in. There's some key levels on there, and they're key levels throughout all ETFs because it's algorithmic. So that little key point we're looking at here will probably bring the ETFs right down into that optimum level we're looking at on the daily over here. Is the same thing on ETFs that I'm looking at. So watching this and learning what you are teaching, I am able to see insight on why I was failing so many times. It's good. It's not so much failure now, it's feedback, right? It's like, wow, okay, I've got some feedback of why. And you're really good, Dave, because you're starting to recognize that insight. You're starting to look at from a lot of the charts I see you posting in, and a lot of the questions that you ask, and I love the curiosity that you have when you're looking at a chart now. You're starting to say, well, that, yeah, I see a return there, but I don't know, it doesn't feel right to me, because you're so used to looking at Bitcoin and seeing clean entries that when you see it in here and it's not as clean because you see this chop going on here and the markets are not as clean as Michael likes to see, like you would see in Bitcoin, for example, those clean runs up and down, clean reversals. You're already developing that eye for a cleaner setup. And now that you're aware of it, when you look back on some of the stuff you used to do before, it's not failure. It's just now you start to see it as, I get some feedback. I'm seeing the market in a different way. I'm literally watching every candle and I'm comparing it to where it is in time and space in price action. And you're developing, I have to admit, you're developing a better, cleaner look at your charts from my humble experience. That's what I'm seeing you with your learning, and you've come so far so fast. It's amazing to watch. So I'm very proud of you, Dave. Seriously, you're doing really well. And I don't want to give you false praise. I just want to say I recognize what you're doing, and I recognize how much work you're putting into it, and it's paying off for you. I see it in your charts. Obviously, I see it in with all the price, the demo money you're making. And it doesn't really matter about the money, but the demo returns that you're getting on what you're seeing. So congratulations for that. And Simo, I see you doing the same thing. You're like in there all the time watching these charts. Lambo's the same guy. He's like really killing it now on these rejection blocks. He sees it as a level of importance. It's a level of pay yourself, and the difference between trying to get that extra little piece of that wick can be huge in terms of winning and losing. huge, like this one right here. You know, you didn't get the high. You tapped it, but you didn't take it out. So you would have been right up to it, and then all of a sudden it would have come back down, and you would have been, I'm losing all those profits. Luckily, you got them back again, and that finally took them out, which is good. But sometimes you don't get that option. You just get wicks that return right after the consolidation or after the rejection block and just take you right out. Pay yourself at rejection blocks. Good morning, Invest. Looking for 246 and 254 reject. 254 to reject. 256, 254 to reject. Why are you looking for it to reject there, my friend? 256. Oh, off of the breaker. Oh, okay. That's 256 right there. Off the breaker. I'd give you that. That would be a potential place. Good eye. Nice one, Invest. Yep. Order block, does it hold price? Or do we dig down into a deeper, look for this deeper range that you're sitting in here? You want to see this, just tap this and snap, watch it snap off of it. This is the stuff you should be looking at right there. How's it reacting off of that? That little bobbing up and down right there, what's it doing? How fast did it pop back off of that? Look for that kind of stuff. And you think, how many wicks does it put down there? Is that resistance? Is that thing just pop and then it just keeps reacting off of it? Works it like crazy to get down there and pop and then it just reacts off of it again? It's like, no way, man. I've got some other intent. So you kind of look at it as, what's this drill doing? They keep drilling bits down here and they just keep failing and they got to retool it, try it again, fails, retool it, try it. You can tell I worked in the oil patch, eh? They just keep busting heads trying to get down there. And then all of a sudden, I think it gives way. It has to keep going up. Like this guy's holding price back, right? Right off that opening candle, just holding price. Mean threshold hasn't been hit yet. Let's try, drill bit. Screw it. Let's get out of here. It's just nothing but bedrock here. Let's get out of here. No oil here. Move it higher. Let's get some carrots. This man has something special. I don't know who this man is that you're talking about. Right on. Awareness. Thank you, sir. Oh, you're welcome, Dave. Like, don't look at that as I'm just buttering you up. I truly am proud of the work you're doing, really. There's so many people in our Telegram channel that are doing great that I'm super happy for. Has anybody heard from Terry? I haven't heard from Terry in a while. Remember Terry Sullivan from England? My mate from England down in Bristol. I texted him the other day and I hope he's doing well. I know his wife's having some issues with cancer. I really hope everything's working out and they're still managing to live and love there. So my thoughts go out to Terry. It ran for the carrot. You see that? Holy doodle. We're saying, we're going for this for sure. Oh, there's your 256 taken. Now you're looking for this line in the sand here. Invest is 264. Mean threshold. That's your line in the sand to go short or reverse. And right now I haven't got any significant. Yeah, I guess you could call these enough for reversal. But there's just too much cheddar sitting up there now that says, I'm in this for the long haul. Now, if you are still long on this, right? You came in and you got long on this. We're looking for confirmation. If you're paying yourself, that's good. If you're looking for confirmation that we're going to continue going higher. If you decided to say, I'm aiming for this order block, I'm in this bigger range here, and you chose to go long, you kept going long, you endure this reversal, and you're saying, there's a swing here. If I lose this on a body close, which it doesn't, I'll go short, or I'll close my trade out and I'll take a little bit of profit and I go, oh, I'll move to the sidelines. But if I don't, if that holds and you'd be sweating, you go, oh, it's holding. Oh, good. It finally got out of there and kept going up higher. We haven't lost a downside candle yet. So you're still managing. That's why you're trailing. Your fail safe would be right here. If you close below it, your fail safe would have been activated. So you're literally, your psychological fail safe, or whatever you want to call that, is going to be sitting right there on that candle. And if it closes below it, for my rule, again, how you develop your fail safe rules is up to you. But mine would have been, oh, I'm getting squeezed. If that body closes below, and it comes back into it, I have to close out. It doesn't, well, good. Now I move up to the next one. So I wait for the next fair value gap to form, which is right here. Now my stop loss moves right up to here, and my fail safe moves to here. And I'm still aiming for up there. So this is called your trailing fail safe, kind of like the trailing stop loss. But you see how dynamic it is? Initially, it's right here. It's very small. And now all of a sudden, it's bigger down here. It's sitting right there. Or sitting off here. It's a smaller fair value gap, right? They could be much bigger fair value gaps. So now, if this continues higher, I want to make sure that stays open. If I start breaking through the mean threshold of that candle, which is what we just tapped off of right now, I expect to see a little reaction off of that. Now then I watch the head of this thing, and I watch. And I go, oh, look, that sucker's not, it's not going snap off of that. It's just going, it's hanging around in here. It just tippy-tappy back to mean threshold. Or am I going to come back and test this fair value gap again? Watch the mean threshold. Does it give way? You're in a premium inside this range. So watch. Tippy-tappy off the mean threshold. Now keep pushing higher. If you got intent, start going higher. If you want to just fiddle around with people a little bit, because the mean threshold, that breaker is really, we know is strong. It's a senior array. We just say, all right, I don't mind. Come back here a little bit, give you a false sense of drop your guard, and then slam out. With intent drives it up there. I don't know why I'm coming up with all these breaking glass, drilling oil, drop your guard. See how you drop below it now? That validates this is an order block. We still haven't swung out above an old high yet, so I'm still going higher. So here's your trailing stop loss. So if you're into this profit or into this reversal, we're calling down here, and I know some of you were doubting that. You were saying, bull, man, that's going all the way down now. Nope. It's the reversal. It showed it to you right here, and now we're showing you how you can trail it, your stop loss up behind it, which is your fail safe. And if you don't know what the fail safe is, go to my Sunday session. It's not a Michael thing. It's just something I developed that is another way of protecting your money over a regular stop loss. Regular stop losses will be placed for those rip through for some crazy event, takes off and takes you out real quick. Your fail safe is sitting right here. Your broker doesn't see your fail safe. Your broker sees your stop loss. So if he tries to take a run on your stop loss, you'll see it before, unless he just rips through and takes you out, then not much you can do about that. But if the algorithm is turning, you'll see it turn right there. That's the indication the algorithm's changing directions. For me, that's my reversal thing I'm looking for. So if it, see how it's just come back here, tap the fair value gap. See that little reaction off of there? And now we're starting to dig back up into this order block. Mean threshold. Watch the, see how it ate through the mean threshold quick and then came back down? So you see it snaps off of it. We're going to come back to revisit this one more time. Look for that order block. Look for here. So your fail safe. If you don't get that high, who cares? And if it closes you, if it pops in here, comes back up, and then closes, and then starts going higher, oh well, that's my rule. And I say, I'll take my profits to there. I'm not going to beat myself up because I didn't get the high. I don't care. I just wait for another reversal to happen and get in on it. Or if it trades above this again, Then I get back into it and I'll go for that high again, because that becomes an important inversion. Right now, it's just a recaptured fair value gap. We're tapping the mean threshold of it, or consequent encroachment. So watch right here. See how we coming back down, tapping it? Because those of you who are saying, oh, look, it's going to take it. If this takes us down, I'm going to say, nope, we're bearish again. And then if it goes above it, I'll go, yep, we're bullish again. I'm back on your side. But right now, I'm not. And I will literally change my mind back and forth based on that right there. I don't care about all that stuff. I don't care about all these levels. I only care about what's price doing right now on a 1 minute chart. And you see how accurate it can be? And that had nothing to do with any of these time frames. It had nothing to do with that up there. It just looked for that specific point right there that said, guess where I'm going? Right there. Pop. I'm going up, giving you a couple opportunities to catch the bus. These are free memberships on the bus ride, a free ride up. Do you want to catch the bus? No way, man, it's going down. Okay, express bus north. And you go, where the hell? Okay, they're going up there. Not if it breaks that, it doesn't. Then I'm going back into this range and I'm looking for a discount array back in that swing there, there, and here. So you see how it came back, tap the very bottom of it? Now I want to see it run up. This guy drops his guard. It's like a video game. You have to play it in your head. That guy's dropping his guard. He's turned his back. Run, quick. Get past the guard. This is the kids with fake ID trying to get past the bouncer at the door at the bar. You're trying to get past the bouncer. You got bounced. He saw the fake ID. You went back. You got some new ID. And now you're trying to get through. We are going for a new high. Right now, I'd say yes. I'd be saying, Bill 1, yeah, I would say we're really between here and here. So I'd say you're on that candle to that candle. I would like to say, yes, we're going higher. I'm still bullish. For now, I'm bullish. And yes, I'd like to see these highs get taken out. But I'm between these two candles. One step at a time. Now, some of you may have been who are into these these lower time frames right here. See this hourly one? See how it came all the way back down inside this reversal? If you caught this as the reversal on the 1 hour, which we were doing here on the 1 minute, if you looked at this and you went, I'm looking right now for something to confirm on the hourly, this swing going higher. So you look, so you go right here. So that's sitting right there. That low is sitting right there. And you go, as soon as I see a confirmation to the upside, which is right here, you go, I'm going long on this because now I've got my kickback. So look where that is right there. That's way up there on your candle. And then it suddenly dips down into here, gives you an opportunity to get in, and off you go. And now your 1 hour reversal has just been fully filled, and off you go. So if you're doing your 1 minute chart, for example, we look for this reversal to happen. On your 1 hour, as soon as you dip into that right there, you start to buy. And if it body closes below it and comes back into it, you get out and you go short. Right there on the out. It's the same thing on every time frame, folks. It's the same damn thing. So now let's use lower time frame and higher time frame in the context of what's the best opportunity to get in. If that is your objective, if you like to trade on a 1 hour chart, you want to use a 1 minute chart to confirm your entry, it's right here. If you're bold enough to go, you know what, as soon as it comes back there, I'm trusting this is a swing. It's a definite taking out of the consolidation on the downside. It's come back, it's cleaned out the top, come back through. Inside, I'm going to go long on that. And you literally buy it at that point there. If it fails, you'll get out at break even. This is that ideal one I was telling you about that you could capture major profits on. It's like capturing it right there at that moment. You say, I'm buying that long, because if I'm wrong and it trades below and pops back up, then an hour or so later, my stop loss is going to be here. Hour or so later, I can break even, or I've just caught a tiger by the tail. And that 1 hour chart, you literally caught this entire run up to where we're sitting presently. And you're looking for that confirmation every time. Right there, you say, am I still in my hour chart? Yep, good. I'm still long. I'm still long. It did not break my the downside. It did not break the downside. I'm still long. When it closes below here, I can close that trade out now. Here, I can close that out for a potential run back into this wick and fill it back up again. So I'm waiting right here to close out my 1 hour chart right there. Because if you're wrong, it's going to come all the way back down and you're going to go, crap, I've missed this entire leg of profits. And you can manage it by using your 1 minute chart. Does that make sense to you guys? Was that clear enough? I hope. Have you noticed the best setups and entries and exits in Bitcoin happens during the Asian session? Hiron, I believe you, man. I believe you. Yes, they do. I've seen that. I find every when I leave this charts at the end of the day and I go play around in Bitcoin, that's where I can do some real killer stuff. And I usually do it just before I go to bed too. At nighttime, like if you look on the Telegram channel, you'll see that there was lots of times I was like, oh, look at this. I went this way and I went this way and I went this way and I caught the range bouncing up and down because it was reverse, reverse, reverse. It looked just so clean. So those of you who are aiming for that high, remember, it's starting to close below it now. So now you got to say, I can't aim for those highs anymore. You've got to be prepared to change your mind, even if your objective doesn't get hit. And if your fail safe was right there and your stop loss was sitting here, you just got taken out. That's all your profits you're getting right now. Get ready for a reversal, for a run down. And you'll make back what little piece you lost on your profits right there. If you're really trying to juice the snot out of your orange, here you go. There's 3, 2, 1. Look for 11 o'clock. Yes, we are for a reversal back into this range. So come back up here and give us some loving. Come on, baby. Give me some love. Oh, let's just put a freaking trade in there. Oh, wait, I can do it right here. Damn it. Oh, it's not going to give it to me. Damn it. It just came up and touched the lows. Come on, give me in. I just want to see it get into here, and then I'll see another one over here. Because what do we got? And let's put 3 of them in there. What the hell? And we'll put our stop losses when they're finally taken in. Come on. Oh, look at that. It gave me a kiss. There you go. Now, if I'm wrong and it does rip through me, and that's not a good sign. Mind you, you do have this little piece here. I want to see it get through the mean threshold. If it gets through the mean threshold, I'll bring that right to break it, or just above here. Now I'm looking for a 75 or 50 to 65% retracement of this whole leg that we created between 10:10 and 11 o'clock. And then you'll see the big run up and take this lot out. Unless it takes off now. And it closed. Did it close above me? Yes, it did close above me, so you should close that out. I'm going to wait because there's a little bit of wiggle room there. I'm out. It's going higher. See how it trades below and you go, oh, good. Now I get an opportunity to go long or short. Then see how it traded just above it right there. That's why you wait to the last one and you go, oh, pop. It gives you an opportunity to get out and then continues going higher. That's it right there. That little tiny sign right there that we're continue higher. So you got to be quick to see it. Otherwise your stop just got taken. That's why the fail-safe works nicely. And that's why that when I'm going to talk about that one where you get that entry right there, that perfect entry, so that if you catch the long, you're really catching a monster tiger by the tail. That's what we're looking for right there. If you're wrong, then as soon as it pops up above you right there and comes back and taps you, you're out at break even. And those who were long, when we were loaded on all three of those, they all took a loss rate. The last one took almost no loss. This guy took a little bit. That guy took a little bit versus the whole thing getting taken out. But right there, it said, nope, I'm going higher. You got to be quick to change your mind. And I don't care that I was wrong. I just trade right off of that sucker right there. And that's where the algorithm's saying, I'm going to sucker Darren in, take him out. You committed. In front of all those people, you committed to 73 people, saw you fail. No, I showed you some success because I just told you it was going to change direction right there. And now the high's taken. Now you're saying, I knew it was going to go there, Darren. You're right. You were right. I was wrong. Back, tap the fair value gap. See that? And now we'll start running for the high. Come for the carrot. Come for the carrot. Wouldn't that be funny if it stops right there? Right off the rejection block, and you go, damn it, it didn't take the highs out. And turns around and comes back down, and they go, oh, Darren was right about that damn rejection block. I should pay myself that right there. So if you're long from there to rejection block right there, you may go, hell no, man, I'm going for up here. That's fine. If that wasn't your, I'm out right there, if you kept holding and you're only trading on the 1 hour, then I don't even know where you'd put your stop loss in that situation when you've wicked down that much. I guess you'd have to pull your fib tool from high to low, and as soon as you hit 50%, move your stop loss to break even. Let's do that. Let's have a look at this one. I just want to say, if you were trading on a 1 hour chart, let's see how we were managing that on a 1 hour chart. Let's say we pull our fib tool from, if you use the same principles we've been using on our 1 minute chart. So you pull your fib tool from the high to where you've just made your little low, and you say, that's the little range I want to pull in here. As soon as you hit 50% of that, whatever you had as a stop loss down here will move to break even. The fact that you're up that high, I'd be like, slam it right up into here. But either way, that'd be just me, because I've taken way too many hits in my life. So if you hit 50%, move your stop loss up to break even. If you hit 62%, bring it up to 50. If you hit 70%, move to 61. 75%, move it to 70. And if you literally take this breaker out right here, if you take 75%, I'd start to really move into that. As soon as it hit that sucker there, I'd be like right up tight at that 70%. I wouldn't even wait for it to get to 75. As soon as it hit that right there, I'd pay myself a little chunk there and leave a little piece on to see if it ran these equal highs up above you here. But that would be me. That's if you like to trade on a 1 hour chart. Now we've got a significant swing point, and we still did not get those. Did you see that? Am I making my point about the rejection block, my friends? See how this unrealized profit, now if it closes below here, this could be a potential swing point, and now it could pull all the way back in that range, and it's engineered more liquidity back up here, and you got one of these ugly returns, and you go, oh man, I just got shat on because I did not pay myself at the rejection block, as Darren has mentioned so many times in the past. Lambo's like, I'm all over that, man. Derek's like, yeah, I see that. That's a rejection block. It did not take out that high. Everybody said it's going to take those highs for sure now. Nope. Pay yourself at rejection blocks. Look for 62% retracement back into that range. This would be a great time for it to do that. If this rolls over here now, goes back into this big deep discount, it's catching all these people here that are trailing their stop losses up now. Now, I don't know about you, but from there, from that rejection block, it's 272 to here. You're already down 34 pips, right to, or 34 handles just to that in lost profits. Now you may say, I'd still going higher. Well, you just ate all the way through your breaker on the downside. You see that? That was your breaker to run above these old highs right here. And you ate all the way through it on one candle. So if we come back up into here, if we even get that high, look for this range here, or this range here, and look for what PD arrays are inside this range that I can get at. This sucker here, this one here, there's a little tiny guy right there. This is the reversal one. So if we can get up into here, you can take a small one there. And if it doesn't, if it trades through it and comes back up into the breaker, you can continue short into the 50% of that range. So just keep an eye on that. What do we got over here? Yeah, I just paid myself. Good for you. Similar lately, I'm getting my butt chopped. So that's kind of good, Lambo. If you're getting your ass handed to you, go back over and look at price action. Go back over exactly where you got taken out and ask yourself, what range am I in? What PD array have I missed that's above me? And what one am I potentially getting roasted on? So see how you've got this one here? It's not a swing below a low though. If we break above this and get on top of it, you know, I think you have more upside. But this reversal here, which was already taken out a high, to me has more potential, especially during that reversal into a, I'll even try and take in that one. How's that? Just because I don't want to be all talk. I want to kind of just show it, because if it fails above me here, then I will take a loss up there. So this can be all bearish here up into this candle. So I'm looking for first payout right here at the rejection block. This would be the ideal one right there. for the short. See how we've traded above this one now? You say, because it's not a swing low below the low though, is it a valid swing point to go higher? For me, it's not. But I could be wrong. We still got liquidity sitting above us here. So my fail safe will be right here. Unless it just runs me and takes me out. And there's something more restful. There's something more calming about taking a trade where if it does go back against you, it's okay. I'm starting to really trust these reversals. Only when they're like when they make a significant reversal, then I go, yeah, I'm starting to trust that more and not worry too much about it. And if it just breaks above my point where I want it to, if I'm wrong and it's going the other way, then I'm okay with that little bit of loss, because you potential to make it all back again is on the next price leg up is easier and less stressful. I think because the more you start to trust these, the more there's no reason to be stressed out over it, because they're so consistent. And that's what we call in NLP. What's your meta program for being convinced? Do you need to be convinced once, twice? Are you one of those kind of bosses or employers or employees, or a person who prefers to see somebody do something once, and once you see them do it, they follow the technique, you go, good, I trust you now, I'm good with that? Or are you one of those people that say, I need to see you do it 3 or 4 times and I know you've got it down and you're good to go, right? Or I need to see you do it 100 times before I'm convinced that you know what you're doing. I don't want to see it come above there again now. It's already done its down. This is the kind of reaction I want to see. Or are you one of those people that say, I'm never convinced. You'll never convince me that you got this right. I always feel like I have to look over your shoulder every single time. Are you one of those people? Because if you are, you're going to find this very difficult to buy into, because you're never going to be convinced that that is a reversal. And you got to be prepared to say, look, I'm inside this range right now. So I'm getting bashed around inside here and here. So that candle there, if that mean threshold goes, then I've got to get out, because it's going to take me out. I literally look at the little ranges that I'm in now and I go, ah, crap, I'm inside this thing here, and then I'm losing my mean threshold, so that's probably going to take me out now. I don't want to see that get revisited. There's no reason why it should have to come back up there again. We should just see that leave, but it's probably going to pop through now. I've already lost that. I've lost the rejection block. Just get out. Now you may say, okay, well, you were convinced that was going to go lower. I was. And now I'm convinced it's going to go higher right there. And I'm okay with, and if you're in a consolidation, you got to be prepared to change your mind over and over again, right? And there's the higher. All because of that little spot there. It came back, give you one opportunity to get out. That's why I say that's the perfect entry right there. Again, proof that the failsafe works perfectly right there. You can't get any more perfect than that. It just said, I'm going higher. I'm giving you one quick opportunity to get out because you're on the wrong side of this. And then blammo, it takes the highs out. Because if your stop loss is sitting right there, it literally did not give you any other opportunity and just came back and took you out. That's your failsafe working. But the moment you enter in here and here, you're going to guarantee you're going to take a little loss at that point right there. So instead of your stop loss being here, it's really here when you finally get taken out. Now, if this sucker reverses and comes all the way back down now, does a quick stop run, cleans all that liquidity out up there now because it's all been run out. Has it all been run out? Yes, it has. Just stop run, but still more engineered liquidity. It's still relatively equal highs, but it's enough to clean out a whole bunch of stuff. Now pair that up with equal lows below the market. See how we had a snap off of that quick? All these people here looking for a higher run. Let's quickly run back, take them out, and then jam that sucker up. Because all these people who are trailing this up behind here, you've just paired these guys up that's going short with these guys who are going long. So this isn't failure. It just tells you that the market's just continuing to push higher right there. So yes, you had a potential for a run down. If you want to look at it from another perspective, if I'm trading inside a consolidation, you must trade from PDRA, from premium to discount. Look for the PDRA inside that. Well, the only one you've got is here, and that one there inside that range. So if you go short right there, you got to aim. Your first little take profit's got to be the mean threshold of that candle, then the low, so on and so forth. So trading inside a consolidation, it's not just about trading highs and lows or rejection blocks to rejection blocks. It's trading that candle to this candle. Those are the two candles you're in the middle of, and that the top of this one is already in the premium section already. So you have to take that in consideration. You also have to look at the fair value gap you've got inside there as well. So this reversal thing, see how it comes right into here? I don't like that reverse as a reversal. I want to see that. If there was a wick down there, then yeah, okay, I'd say that's a reversal. Now I'm bullish. The moment it hit here, I'm bullish. Load on there, go long, aim for there, and you would have been in profit. But we didn't get what we were looking for. So wait till you get what you're looking for. Lately I'm getting chopped. Sorry, I'm trying to catch up on some of these, but I was in a micro, not so much. Order blocks, wink, wink. Asian session, Bitcoin live stream by ThetaWaveTrader. Trader? Who's ThetaWaveTrader? Well, are you talking about ThetaWaveTrader? Are you trying to tell me I should be doing an Asian session there, Haran? 78% retraced. I'd be in for a live Asian Bitcoin stream. We're going for a new high. Well, if you guys are in the Telegram channel, usually Dave and I get in there, and Simo usually pops in there, and we start trading that Bitcoin after dinner or after the markets. I'll play around inside there. You're welcome to. I don't think I'm going to do a live stream. I don't want to get in the habit of doing. My wife will kill me if I'm in here. It's bad enough I'm in here most of the day. Market maker buy model. Getting ready. Reversal ready. Yeah, no reversal yet. Fernando's retracted his messages. Failsafe works very well. Yes, too close to not take out 272. Hold on for the drop roller coaster ride. MW got. Now it could go sideways for 3 hours. Yes, Lambo, it could. Nobody is buying this here. Pay the trader. Look at the 10-minute time frame. There is institutional order flow entry drill. The 10-minute. Those of you who are on that 1 hour chart are just killing it right now. If you took that, when we were talking about it down at that level, and if you're looking at a CAM 1 model entry, oh man, you guys are just killing it right now. You're doing really well. Bullish. 1059 bullish order block. 1059 bullish order block. 1059 orders. This one. This is a breaker. Yeah, that's a breaker. When you start to run above old highs in this streak right here, and you run above that highs, these swing points, that's a breaker. We came all the way back through, right through the breaker, right through the mean threshold of that breaker, and it still managed to hold. Came back up inside it, so you broke to the upside of it, came back inside, found some support, and we continue pushing higher. This one here, order block. If the breaker holds price, you trade inversions like we used to do before. We traded reversals. These inversions, as soon as it trades above the inversion, it comes back to it. You find support, stop loss goes below the low, and you start running that. You just keep trading these inversions every time you see one. Or they become inversions once we get to the other side of them. So this would be just a reclaimed fair value gap and pushing higher. Just that strategy alone is something you can just watch and practice for a while. Look at 10-minute kind of new week opening gap between 831 and 329. Man, talk about a silver bullet, delicious entry right there at the 1016 candle, hey? Boom. Lovely run. Lovely run. No, I wouldn't be, it wouldn't be funny if it stopped here. Move here for short time frames. Who bought that high? Price keeps me being rejected on the consequent approaching of the 4-hour CB. Can you confirm? On the 4-hour, let me have a look at that for you, Anthony. It keeps rejecting off of the 4-hour consequent encroachment. Yeah, I would say yes, it is. Hit it, really ripped down into the mean threshold of that candle. So if you're on a 4-hour chart and you say it's coming back into this consolidation, if it's digging into that, pull your fib tool on that. And if that's 50% of your fib, there's your cam model 2. Or you use your lower time frames to confirm, is this mean threshold going to hold? So go over here, look at your, is this mean threshold here going to hold? So for this on a 15-minute time frame, if you're looking at 15-minute for a 4-hour confirmation, and you say, is this going to hold right here? Nope. Are we losing this? Yep. Are we losing the mean threshold? We're coming right down into it. Good. So what is in here on a 15-minute chart that gives me pause? You've got the high, the consequent encroachment of your fair value gap, and you got your lows. Don't always think they're going to fill. You've got this consolidation right here before the run down. You have a 15-minute cam model 1 entry right there. So look for your lower time frames to confirm something. If you're trading on a higher time frame, look for your entry, look for your perfect entry, and just keep drilling down to a lower time frame till you see something that looks like, here's my reversal. Here's my reason to get in on that spot off that reject. If I'm not getting on that one, I don't see anything there. I don't see anything there. I don't see, all of a sudden I see something right in here on a 1-minute chart. Look at that on a 1-minute chart when you get to this rejection block here. Here's your 1-minute chart. There's the rejection block right there. Sorry, your mean threshold. So it's literally the bottom of this candle right here. And you go, is there going to be I'm looking for any chance I see a reversal happening, and you see it right here. You go, oh, look at that. You're in, now you're going long, and you get back into your time frame, your 4-hour time frame again. You move up, close this out, get away from it, don't even look at this anymore, and you just go straight back into your 4-hour, and you manage it back on your 4-hour, and you wait. Now you're just going to collect this all the way back up to the high there. If you trade on a 4-hour chart, capitulation move here for short-term time frames. Who bought that high? Lincoln price rejection, might want 281. Greedy algo. I got out in profit small. I got out because I did not move. It did not move lower quickly. Good. This thing has had one expansion now. It's consolidating. Dice. Choppy till next week. I agree with you, Dice. I think this is going to be, I have to get my chart out here. I draw on my charts days I think are going to be Turner. I had this candle counting method. I started sharing some of it with you guys. I never did share the higher time frame candle counts. But I look for specific days on the charts and I mark them as potential turn dates. And the accuracy is pretty freaking awesome. So I haven't done April at all yet. So, and then I color in how accurate I was. I highlight the day if I nailed it. And if I can get the weekly charts or the monthly charts turning at key points, then I can start to zoom in on all the way down to this 1 minute chart for great little entries. Anyway, that's my evolution I'm still working on. Do you provide signals? Robinhood, do I provide signals? No, I don't. I just tell you, I give you better than signals. In my opinion, I give you better than signals because I'm trying to show you how to use Michael's principles on a minute-by-minute basis. And you only have to talk to the people that are in here right now, and they'll tell you whether or not it's better than signals. I give you multiple places and say, you can enter in here, you can enter in here. Whether you choose to is entirely up to you. But I'm trying to show you how to trade, or just at least how to read the tape, read price action. There's reading price action and there's knowing price action. There's understanding price action. You really have to understand it. Once you understand it, you don't need signals. You see it, you'll see it clearly where you want to make your entries in. See your swing point right here? See that swing above that high? You've taken those highs out. You'll wait for a swing point right there. Body trades below it right there. There's your signal. You go short right there. And you start collecting. Order block. Inside that ugly one that we saw there, mean threshold. You want to see it close below that? Keep pushing for lower prices now. So that's your signal. That's your swing. You don't need me to tell you that. You see it. I want to teach you price action right there. It's saying, I've done my bit. Now I'm going down. This one here didn't break the low. This one did, took me in, then broke the high and said, nope, I'm going up higher. It did go higher, finally took the highs and said, okay, now I'm going lower. Now my intention's going lower. So Robin, stick around here, buddy, and you'll learn. If you're using Michael's principles, go study ICT stuff. Go to his free stuff. Don't pay for it from somebody else. You get it from Michael for free, and come here and I'll show you how to use it for free. And like on a 1 minute chart. Trend cruise. A sell setup is coming right up. Yes, it did. Okay, I'm off to sell some tea times this afternoon at the golf course. See you all tomorrow. Thanks for popping in, Derek, and thanks again yesterday for popping in. I appreciate it, and sorry for all my little yakking during your show there yesterday. So I'll keep my mouth shut more often. I'll just let you do your thing because you got it dialed. I was about 15 minutes too early. Okay, so listen, think about the statement you just said there, MW. Is it what MW? You said, I was 15 minutes too early. You weren't 15 minutes too early. You saw a setup and you took it. And the setup turned on you. Did you recognize that it turned on you? And you go, that's okay. 15 minutes later, you go, okay, here's another setup. I'm going to take this one. Because if this turns against you and runs back up, you'll go, oh, I was 30 minutes early. You keep judging yourself on what you did back here. Really is going to frick with your head. It starts to screw with your doubting system inside your neurology. You just say, I was not 15 minutes early. I saw an entry. I go back and I go, here's where my entry changed. And I changed my mind. And yeah, you saw me take a couple of losses there. I don't care. It changed direction. So now I'm back in sync with the market. You staying in sync with the market is what you should be practicing. Don't beat yourself up just because you missed it. You were in 15 minutes early or something, because you're judging now what you did back then. And you can't. You cannot judge what happens over here by any decision that you make right here. Because if this rips against you right now, you'll be saying, why didn't I pay myself at these rejection blocks on the way down? Why didn't I pay myself at this order block at the mean threshold of that candle? That's where you have to evaluate your plan. But in terms of being 15 minutes early, I know you're totally basing that on this and the fact that it ran that out. You can't do that. See how it's returned to it one more time? This is buffering. See how that guy there? You pay yourself on the way down. You get another opportunity to load back in again to go short. It's like starting your trade all over again with a pocket full of money. See? And you've just buffered on again. That's what I call buffering. It's just cutting any loss. If this suddenly starts ripping up above these equal highs again, if it runs up above you, you've already made a bit of money and you've buffered any potential loss of it suddenly going back up against you. I call it buffering. Not a Michael thing, just some little personal thing I keep giving it. So you got in here again. Where are you paying yourself? Order block, rejection block, old low, rejection block, old low, old low. You pay yourself on the way down. And if it comes back to you again, you get more opportunities. And if it takes off on you, you go, I don't care. I paid myself on the way down. I got a little bit. Because if you start saying, oh, I should have waited longer. Again, you're judging yourself based on tomorrow with the best information you have for today. Far too many people do that in all aspects of their life. You can't do that, man. Make the best decision you can now. And then if tomorrow's information is different, change your mind. I reserve the right to change my mind if I learn something new. And if the market turns on it, don't marry your trade. Like some people who marry an opinion and they realize they're wrong, but they married the opinion because their ego gets in the way. And set your ego, set that little sucker on the side so you piss off. If this changes, I'm on that side. And you piss off. If I change my mind, I'm on this side. And I'm okay with that. Don't let ego get in the way, because it'll eat up your pocketbook if you do. Just change your mind and go back to a better position. Happy golfing, DC. Hit him long and straight. I think he is working on the pro shop, but still is good day at the office. Maybe they will have the masters on. Pro shops usually do, yeah. We should all pile down there one day. When we make enough money, we'll just say, hey, Derek, we'll come into your thing. Set us up the whole course. 50 of us are coming down for a tournament. Or 616 of us are coming down for a tournament. That'd be awesome. Got to step away. We'll be on later if we can. Thanks, Darren. No worries, Dave. Take care, buddy. Thank you, sir, for the advice. You're very welcome, Robin. Is it possible? 1-to-1 risk, reward, 80% accuracy, 20 trade, monthly consistency with ICT concept? Oh my goodness. Robin, if you can't see that there's accuracy in what I'm showing you today on a minute by minute chart, every candle telling you where they're going to go and what they're reaching for. if you can't find consistency in what I'm showing you on every freaking minute candle, only you can answer that question for yourself. Can you find accuracy? Damn right you can find accuracy. R1, I don't use R to one-to-one ratios or R ratios. It's a fixed. As you can see, things are so dynamic. Having a fixed return makes no sense to me. I see guys saying, oh, I did an R1, I did an R4. I don't give a shit about that. I don't care about that. That's a fixed level. Does anything in here look fixed to you? Does anything in these charts look like a fixed level to you? They are completely all over the place. They're dynamic. Your ratio, your reward may be 1-to-1, it may be 1 1/4 to 1. It may be 50 to 1 on how you manage it. You may go from here, your entry was right there. You had drawdown to here. Your stop loss was down here. So you're expecting an R1 ratio up here somewhere. And you may scale out right there, a portion there, scale out a portion right there, scale out a portion there, there, and you keep hitting PD arrays that are just above you. That's your R ratio, the PD array. Wherever it sits in there is the ratio you're going to get, in my eyes, because it's dynamic. It's not fixed. It's like a trailing stop loss, man. Trailing stop losses are for people who have no idea how to properly manage the back end of their trade. And I got nothing wrong with it. If you use them, great, good for you. But if you don't know how to manage your back end of your trade, if you're a front end trader, have a fixed stop loss behind you. When it has these dynamic returns like this, if you're trailing your stop loss up, this dynamic return would have taken you out. And when you just say, well, it's coming back to a logical level of a PD array, I can allow that to happen, then you've got a flexible trailing stop loss, then it's more dynamic because the markets are dynamic. So that's how I'm going to answer your question. And 20 trade monthly consistency. Well, the 20 trades is an irrelevant question because the 20 trades is how many trades are you going to take? I've just shown you like a dozen trades this morning with a high degree of accuracy that works, and I could say I could do 20 trades in a day on a 1 minute chart. If you want 20 trades a month, trade on your 1 day chart or trade on your 1 hour chart or 4 hour chart with the exact same principles that we're showing you here with ICT techniques. Trade on those time frames. If you want 20 trades with a high degree of accuracy, then you'll look at this kind of stuff. Like that one we talked about this morning on the 1 hour. If you're trading on the 1 hour and that was your reversal pattern right there and you got in on a perfect entry, you're killing it right now. You're absolutely destroying the market right now. And you got in with zero drawdown. So I can't answer that question for you in terms of 20 trades consistently a month. Consistency is in the trader, not in the algorithm, not in the techniques that Michael teaches. He teaches some amazing accuracy, as you can see here. And this is just reading the tape at this level. And if you can read it at this level and it looks clean and it's logical, when you start to apply the model that you have with your understanding of reading the tape, then your level of consistency will increase, will get better and better till you find the model that works for you, right? Because he's got lots of different models. All I'm here to show you is how to read price. And occasionally I'll drop trades in here so you can see how they work. Yes, D. Lincoln, Anthony Lincoln. I must agree that I look for a particular dollar value than a fixed return. Not sure I agree with the dollar value either, but okay. If you're looking at dollar value, you're not looking at price action. You're trading dollar value. It's a fixed thing you're looking for. You're replacing your fair value, or sorry, you're replacing your stop loss, your R to R ratio with just a fixed number. As soon as I see a number, I'm going to take that $100 and I'm out. Nothing wrong with it. I'm just saying it's a fixed thing. It's not dynamic, and the markets are dynamic. So having a fixed dollar value is no different than having a stop loss. You've got a lot more sentiment, emotion behind the dollar value than you do behind there's a lot more emotion going on with you, Anthony, with the dollar value than there is, because I look at it too. When I put a trade on, I look at that dollar value and I go, ooh, do I really want to sacrifice $500 in this trade? I don't really want that. I better really make sure my failsafe is in place for me to manage that. So here you're going short for all these, and now it traded against you. So you look for your swing point right here. We've taken out these lows. There's your swing point. So trail your stop or your place over right there. It breaks and says, guess what? I'm going up. I'm going higher again. I'm between here and here. Do you trade it? Up to you. If we still got upside liquidity or upside objectives that we're still reaching for in a higher time frame, you go, well, I think I'm going to go for it because I still believe that we have more upside to go because my bias. There's your reversal. There's the body, trades above it. You trade back all the way inside it. Now, with Darren, he'd be like, oh, you just popped out of it. And I have to say, well, I give the leniency I give it is this fair value gap here. If it comes back inside there, if it trades below that, then I'm definitely going to get my ass handed to me. But you have a couple little bodies below. Again, how you manage these two candles is entirely up to you on your failsafe. And I talked about that on the weekend when I made it. Go back on my weekend video and you'll see how this is you. That's your personal twist on the failsafe. What rules you put around those two candles will determine whether or not you're in or out of the trade to go long. So it goes, if you kept that one, and that's where it reverses and goes long, comes back up and cleans out this thing right here. See how you say, I've closed above that high right there. I'm going, giving one opportunity to go long with me. Go here and here. It takes it out. Then all of a sudden it reverses right here. There's your reversal. You've taken out the highs. It reverses on you, comes back up, doesn't quite give you an opportunity to get out. So as soon as you see that and it comes back up and comes back down and taps that, I'm out. Like if it doesn't give you your out right there and you go, oh, it didn't quite get me out. It's coming back down again. As soon as it comes back to that open or that close, I close it out there. So that's how I manage that. If I don't get it back there and it starts to pull away from me again, then I don't give it an opportunity to go to my stop loss, wherever your stop loss was sitting. And you can't get in there short on that either. So if you're going long, you got your profits taken out right there when it came back. Or you took out, scaled out there, you scaled out there. Then you saw this forming, you think, ooh, that's not good. Oh, it's traded below it. As soon as it comes back in, I'm going to close out the rest of that trade that I was taking long here. But you scaled out here. So you already got profits out of it first before you finally close the rest of it out. I hope that makes sense. I hope that makes sense to you. My first time listening to your live. Your advice seems very calm and logical. Looking forward to viewing more. Oh, you're very welcome. Oh, thank you very much, Anthony. Which playlist should I watch to learn ICT concepts? Oh, you're asking the wrong guy. I came from the old school. So you want my advice? You go back to season 1, episode 1, and go to season 15, episode 95. Because there's like 100 episodes per season. If you want to learn this, Robin, you need to take 2 years and make a shit ton of mistakes before you get this stuff right. If you generally want to learn how to do this, you've got a 5-year road ahead of you to learn this stuff. And if you're not prepared to put in the time, if you want to do this in a week or two, you're in the wrong place, my friend. You're in the wrong place. And I suggest you just put your money in the stock market and throw the gamble there, because you're going to get frustrated and lose a wealth of money playing around if you're not dedicated. You have to be dedicated to this. This is not one of those things you take lightly or you think you're just going to jump into. Not saying that you are, and I'm not judging you. I'm just saying be prepared, because the commitment you want to make here, if you truly want to understand it, is 5 years, at least 5 years, 2 years for all the mistakes. Michael was right, man. For me, it took 6 years, and I've been doing this for 8 years. It took me 6 years to start to really see it clear, and it's become way more clear to me since I started doing this live stuff in front of you folks, and that was 7 months ago. And I blew thousands of personal dollars. I went live 1 month into my mentorship. I was doing all the things Michael said not to do. That's why I say you got to listen to him, because you need to hear the psychology he teaches you inside that, not just his principles, but the psychology he teaches. And yes, you let him rant. You got to listen to all the rants, because he gives you a little nugget of information in the middle of a rant somewhere, and you got to be prepared to listen for it. And it may drive you nuts, but you make a binder full of notes. And I've showed you guys this before, I think. This is just one of a few binders. I used to do, this is 2020. So I don't know if you guys can see that or not, but anyway, that is all printed charts. That is, and I've got a whole stack of them. And I do, there's both sides on them. Some of them have double-sided, but they're all hand printed. They're all, I make notes on every single chart that I see Michael's given me some piece of information. I will make a chart for it, and I will make, that's my chart for practicing. Or he gives me a little nugget of information. That's just one binder of notes. And sometimes I'll do 12 pages of notes on one 3-hour video that he's got. And I will screen capture, and I will write down word for word what he says for his charts. And I still got these from years ago. They're my little memento. I make flashcards. This is back, man, that's right when I started years ago, like 6 years ago, these things. And then I write all the information on the back, and I have cards, and I take these cards with me. So when I'm sitting there in that no man's zone that your wife takes you to when she goes shopping, you know, where you sit out in the waiting room and that chair where all men go into limbo, and you go and you pull out your charts and you sit there and go, oh yeah, oh honey, that looks beautiful on you. Try the other one on, and then you go back in and you go, oh, okay, that's in order. And you use your chart. I use your flashcards. And you just study away. When I was in paramedic school, I had thousands of these things. I kid you not. And I color coded them. And I would sit there between class, and I would sit there and I'd quiz my friends. I'd say, here, take my things and quiz me. All the time. But I've got a ADHD, so I've got this kind of, when I hyper focus on something, I get kind of nuts about it. As you can see, I get kind of crazy about it. But that's how you got to study, my friend, in my eyes. So I don't know if anybody else can give you better advice in here, but that's, to me, if you're truly dedicated to this stuff, you obsess over it, study the snot out of it, ask tons of questions. And this is the place where you can come. You come here, we've got a ton of people that are just super keen. Derek's awesome. Lambo, all, you know, David, David sees something and he can help you out. He will share it with you. There's so many really nice people in our community that are there to help. They generally, they're taking up the mantle as well of trying to help people out. And that's the community I want to build. I want to help people, and yeah, it's free. So you put the time in, you come, and we'll show you how to apply it. I'm here every day as much as I can be, and I'm here to offer advice. And on my time off, when I'm off the charts, I'm on the Telegram channel. I'm there to offer any advice to you as well, Robin. So if you can, if you put the time and the effort in, I'm there to help you along the way. I will not give you free signals. I will not give it to you, hand it to you for free. I will help you get there, but I won't do it for you. That's my little slant on it. Anyway, that's my rant. That's my rant. Oh, where are we at? Actually, it doesn't bother me much because according to ICT, aim for low-hanging fruit. Absolutely low-hanging fruit. Yes, man. Robin Hood, I've been learning for the past 2 years. I just started my first $100,000 future prop firm challenge and I still struggle. If you're serious, check out his 2022 mentorship playlist. Yeah. I'm all for go to the core content, start with the core content, work your way through at the 20 and then get into the 2022. Like find any video that Michael, you hear Michael's voice and it will become the thing that calms you, sends you to sleep, because that's all you hear. Anytime I look at charts, I hear, when I'm talking, I hear his voice in my head because I've listened to thousands of hours of the guy talk. So he's like etched in my mind. Even my voice sounds like his voice in my own head. Prices approaching consequent encroachment on the 4-hour civvy. Good advice, study all ICT material. I try to cover one ICT topic a day. Yeah, that's fine. Study one today, but don't rush through it. It reminds me of that whole kung fu thing where the student comes to the master and says, hey, if I study really hard every day, when can I become a master? How fast can I become a master? And the master says, it will take you 5 years. And then the guy says, well, what if I study 8 hours a day? And the guy says, it will take you 10 years. And he says, well, what if I study nonstop? If I study every waking hour of the day? And then he says, it will take you 20 years. He says, well, why is it that the harder I study, the more the longer it takes? And the guy was saying, well, if you focus too much on rushing through it, you'll miss the whole concept. It'll take you so much longer. So don't rush your learning. Enjoy it. Absorb it. Let it become part of you. Integrate it into your mindset. Integrate it. And your trading will become, I kid you not, you'll see there's thousands of people out there that don't put the time and the effort in to really integrate it. And you'll very, very few people will you find them studying a 1-minute chart in the markets like this and watching each candle and what specific points it's reaching for. People usually just go, I don't want to spend the time doing that. I want to look at bigger things, and I want to do trend lines, and I want to do Bollinger Bands and MACD shit, because it's all supposed to be quicker and easier and gives you the optimum entry. This is where the rubber hits the road, man. When you study this stuff with every minute and you watch the little bumps going up and down, what kind of intention has that got? I tell you, it's going to make all the difference for you. But it can only lead you to the water, my friends. You got to do the drinking. Well, I talked 8 people out of here. Like, oh, he's ranting. He's not talking about charts. I had a guy in here the other day. It really bugged me. He was I was trying to tell people how I felt about something, and he went off and said, who cares? Just get back to the charts. It's like, just get back to what you're giving me for free. I don't care about what you think. I don't care about your feelings. Just all I want is what you're willing to give me for free. Like, Jesus. Really? Really? You're that greedy? You don't even want to listen to me rant for 2 minutes about how I'm feeling? This is terrible. Why don't you care? Nah. Some people are like, shut up. Just give me the free stuff. Oh, I'm getting tired. So we're coming up for lunch hour. Now you understand how much effort. Yeah. It looks fun. It looks easy. When you get to the part where it looks easy and it looks fun, you've put a lot of time in. You've put a lot of time in. And we've got Dave in here. Like I keep using Dave as a reference. That's probably because he shares, and that's not to say the rest of you aren't putting the time and effort in, but Dave makes it much more visual for me because I see it. I see him asking questions all the time, and he puts charts up and he says, is this what I'm looking for? Have I got this right? Have I got this right? This is what I'm looking at. Is this right? And he's finding a model that works for him, and he's focusing on that model. He may not understand all of ICT stuff, and you don't have to. If you've got a model that's a bread and butter setup that works for you, that's all you do. You focus on that and you get really, really good at it. Like your CAM model people. If you get into really good CAM model stuff and you say, I'm an expert at CAM model entries, and you've honed that skill, you've practiced that skill, instead of trying to go out there, like Michael was saying yesterday, and trying to capture everybody's, who's the next fad person on the internet that's going to give me the quickest, fastest way to learn, give me the fastest money. I don't have time for all that stuff. I just want to get it in and out fast, man. Just show me how to get in there. No. This is not the place. This is, you're going to see this 1 minute, every candle, 1 minute, where it's going, what it's doing. Here's another example of it. It doesn't give us a swing, but it does give us that fair value gap right here. And we think this fair value gap and that fair value gap. We have a premium gap and a discount gap inside this range. When you break the premium gap and you're expecting it to go higher, if the premium gap or the discount gap fails to the upside, you go good, because now all I could be doing is just a simple retracement back into the premium side before going lower. But if the premium one gives way to the upside, then chances are you're going to go higher, right? So here's the discount one. Here's the premium one right here. So discount one, we break it to the upside right here. You go, okay, maybe it's just returning back into here. If you are really snappy, you go, I just want to get inside this trade, this internal range liquidity. Here's how you trade internal range liquidity. There's your fair value gap. If it breaks to the upside and you say, what fair value gap sits above me, or what like array, similar array sits above me in a premium range that I could trade to and get a quick 5 to 10 handles, or 10 or 20 handles. So that's 68, 268. Breaks above, comes back in, gives you an opportunity to go long. So you're at 68 and you go up to right here, here, and here. 68 to 80. 68 to 80, that's 20. No, that's 13 handles. No, 28. So 12 handles. You just made 12 handles. Great. And then you wait. It comes back down. You say, is it going to come back into here? Are we going to retrace back down? Oh, look, we got another fair value gap sitting right here. Comes back down inside that, pops back up. You go, ooh, if it breaks this to the upside on a close, I'm going higher. It closed above. Rejection block. Then you go, ooh, man, if we had a body break above here, this would be a mitigation block because it did not take out any previous lows. And it does. It finally breaks above right there, but doesn't give you an opportunity to get on. So that's how you start to go, ooh, we're going to go higher. And sure enough, we're going higher. But you got to nibble a little piece out of that little run right in here. And if you decided, you know what, I want to go for higher ones, then you got in right there and you're in a beautiful little run up. So until you get confirmation that this gets broken on the downside for a further downside run, and that you start to see going, oh, if it eats through that, my failsafe will go below here now. If it trades below this, I've already taken a portion off there. If it trades below this, my failsafe's here. And if it trades above that, then my failsafe sits here. It trades above it, doesn't come back to it, and now you're still in a huge run up with a little portion still left on I don't know if that makes sense. If I kind of overshot my, like I don't want you to think I was form fitting that. I wanted to show you the logic that sits behind that. Thank you, sir. Do you trade prop firms or private capital? Prop firms. I like to use somebody else's money. I did a lot of my own stuff till prop firms started coming out, and I only got into prop firms back in November. So I was trading my own capital, and that's not a fun place to be, because when you lose your own capital, it's huge. So prop firm is kind of a nice one to be between demo and all live your own money. When you get a prop firm pass, you pass your challenge, then you start to go, hey, look, this is potentially my money now. I really have to invest some time in that. That's why you have to look at demo charts and not just go, I don't care. Because if you go into the I don't care attitude and you move into a prop firm, you'll use the prop firm money the same way you do a demo money. You go, I don't care. If I win big and they have to pay me. If I don't, then I don't care. It's not my money. I only cost me $50 to get a $5,000, $25,000 prop firm account. So I don't care. And then you blow one prop firm account after another, after another, after another, because you carried this kind of stupid mentality of a demo account into the prop firm account. And then if you go live with your own money, you'll be terrified. You'll be terrified. Michael was right yesterday when he said, it's a whole new level of fear. It's a whole new level of, wow. So practice this like it's a real live account. Trade it up like it's a live account. If you blow your demo accounts, do not think about a prop firm. Don't use a prop firm as a means to practice. Use a demo account, then move to a prop firm, then move to live funds if that's the way you go. Because it's not just the trading that you have to practice, it's the mental stuff you have to start to get good at. Because if you're fearful and your guts are churning when you're in a trade, you should be journaling how great you feel about your entry and how you can focus on calming yourself, breathing techniques, get a light that makes you feel better, whatever you can. You need to practice more about your setup and focus on the setup working out than the fear of losing your money. And if you carry that from a demo account, like I don't care, into prop firm, you won't care, and then you'll blow live accounts like you and trust me, I've blown many of both. So, and I because of that, I have to spend years trying to undo the damage I did back when Michael said don't do it, and I did it because I had bravado and I thought, yeah, I could do this. Yeah. Then you get terrified of every freaking nickel. You're watching that dollar chart over here. When you put that thing on, you're watching your dollars go up and down instead of watching your trade pan out. And I still do it. So I still know that I've got a lot of psychological crap I have to overcome. So that's why I love being in here, teaching it with you guys and sharing it with you guys, because it just helps to me to reinforce inside my head, building those new neural pathways that say, this is success. This will work. This works. This works great. That was excellent. You got to show those people that it works, and you got to show them on a 1 minute chart, and it made sense. They see it. You see people commenting on it. They see the logic of it. You're doing great. Carry on. Now drop a trade in there. Good. Now go over to your live account and put one on your live account. But I'll do way more of these trades on here than I will on a live account. And the live account you don't get to see. Because you should be focusing on what I'm showing you here, not on how much money you think I'm making over there. Because the difference between this chart and that chart is this. All that goes on in here is the difference between that and putting your live money in there. That's all it is. I agree with you, D. I think we have posted on your Telegram channel for new people. Ask any consistent, profitable ICT student how many hours of study, if honestly they have, they'll say thousands. Totally agree. Totally agree. And I obsessed over it. And I was a paramedic working 12-hour shifts, 24-hour shifts up north. I'd be doing up north for 2 weeks at a time. And I'd be on call 24 hours a day for 2 weeks. And you try to sleep in, you obviously sleep in between that, but you've got an 8-hour day that you're actually in the hall. Then you go back to the camp and you're sitting there and you're working out and you're trying to stay healthy. I'm on the charts all the time. I'm on the charts all the time. And when you get spare time, I'm in my computer and I'm on the charts, staring at the charts while I'm working, waiting for a call. If the call comes in, then I respond. You do all the things you're supposed to do. If my boss is listening. I was doing all the other stuff too. I was cleaning trucks and stuff. It's absolutely insane how we do exactly what Michael says don't do. We have to learn the hard way before having the knowledge to slow down. It's so true. Oh, and if you're stubborn like me, oh my goodness, the worst person in the world to argue with is yourself. I argue with myself so many times and I just say, I know, but you know what? My gut's telling me that's not right. You shouldn't be doing that. No, go for it. You're probably gonna, the money you can make, the dreams, oh, what you could do, so many people you could help out. I always think, oh, I could help my parents, I could help my brothers, and I could help my brother and, you know, his wife. They don't need my help. I could help out friends, I could help out strangers. Oh, there's so much and you end up dreaming. You trade on dreams and you don't have a decent setup and you have to fail so many times. And that's what Michael's been trying to help prevent. He's been trying to say, look, listen to me. I've lost my thousands of dollars. Please don't do what I did. Do what I'm telling you to do. And I'll help you prevent you losing thousands of dollars. And I was like, ah, no way, man. I know. I got it. I know what I'm doing now. Yeah, you made it look so easy. It looks so perfect. You just put a box down here like this and it's going to trade in there. Yeah, I'm totally going to do that. I put boxes down there, no idea. I'm going to put a box there and it's going to trade here too, right to it as well. You nut bar, you have no idea what you're doing. I look back on that guy and I go, oh. And the positive thing is, man, did he ever have enthusiasm. Cost a lot of money for that enthusiasm, but boy, did he have a lot of enthusiasm, and he still does. Bless that little guy. Oh, good for you, Darren, for sticking to it. You lost thousands of dollars. Your dream was kicked in the teeth so many times, and you just went, you spit your teeth out and you said, I'm going for it again. I'm going for it again. I'll get some dentures put in and I'll do it again. You keep getting knocked down, you get back up. And then you hear all these sayings that say it's not how many times you get knocked down, it's how many times you get back up that matters. And you go, that's true. That anybody who's ever got any successes got kicked in the teeth and were willing to come back up and say, may I have another? That was delicious. Your leather tastes delicious. May I have another? And you get another shot to the chops. And you fall down, you go, oh, it hurts. I don't know if I could do this. And the depression, all that crap that you go through. And then eventually you start to slow down. And then your thoughts start to slow down. And then you start to go, where am I going wrong? And then eventually you're staring at the charts going, where am I going wrong? And then you really look in the mirror and you go, that's where I'm going wrong. Because you go, I knew that was happening. I knew it was going to go there. Why did I take that damn trade? Why did I go there? I knew it was going to go that way. And it totally traded. And I doubted it. And I went out and it went right to where I said it would go. Oh, that's frustrating. What the hell am I doing wrong? And then you go, wait a second. Slow down, man. Are you following a trade plan? If you're not, you're trading with emotion. You're chasing the damn candles. Make them do what you want them to do. Put your carrot out there and say, come to my carrot. or I will not take you. When I get to my carrot, now I'm expecting it to do this. And you'll start to see 2, 3, 4 candles ahead of time what you expect it to do, because it's inside a range, it's doing whatever. You'll learn all that stuff once you pick up Michael's material for free on the internet. Don't pay anybody for it. Learn it. Come here. That's why he stresses mentally. You know, once you win a what's Telegram link? Jeremy, it's up. Go up top there in the bio section or in the description in the channel above, and you'll see it in the link of the Telegram channel. Join us there, and we'll meet in there after hours sometimes and have a chat about something. If you have any questions, ask. That's the place I can answer it for you. And then sometimes those of you who have the exclusive ownership or the exclusive mentorship pass to the Telegram channel, you will get the opportunity to pop in on occasional. Derek will pop up something like a link inside the Telegram channel for an afternoon silver bullet. So that you get the bonus features of being there with a community of people that are like-minded people, and they just want to help. They want to learn. They want to grow. They're not in it all for themselves. They're in it because they generally want to learn this stuff. And if I post something on the weekend, I do it like a weekend session or a live stream. I got a couple of hours to do something. I will post it in there so you get an opportunity to pop in and see it live. So membership has its privileges, as it were, and it's free. Again, no one's asking you for anything. It's all free. Do you use sessions during trading Bitcoin? Oh, do I trade Bitcoin on here? Yeah, sometimes you'll see me run over here and go, ooh, there's a Bitcoin trade. And I'll try to get in on a Bitcoin swing or something like that. Look at that guy right there. Ding, you get in on it right there. That little swing above right there, swinging above, reversal, come back into it, ding, poof. You like my sound effects? Poof. All the way down into buy or sell, 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 and sell. Reversal, right there. Does the body trade above it? Right there, it trades above, and it comes back, gives you an opportunity to get in. Aim for the highs, aim for the next objective. If you don't get it, wait for a reversal. Ooh, if that closes below there, you get out. Blammo. That's why you trade your stop loss up or pull your fib tool and do your fib tool marching. And this thing here wouldn't have taken you out. You would have marched up your stop. You would have been paying yourself along the way just off that little run back into there. You would have paid there. And look at this one here. See how you trade below it? You come back up into it for the swing. You don't get an opportunity to get in it here. It goes down, comes back up, then finally comes down inside this one. So you're from here into this guy again. Discount, premium, inside that larger range. All the way back to the bottom of it right here. Look at that. Ding, you catch that long now. You got another confirmation for a swing to go long. You're paying yourself at here, 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 rejection block, old high. You pay yourself on the way up. Then you see the reversal happening right there. And you go, ooh, I'm out. Does it come back to take me yet back out of the thing again? We're back in from one here to one here. Premium, discount. You're like, there's almost overlapping themselves. So there's just so clean and so clear to see. The hardest part you're going to find is trying to, how do I get out of these trades? Yeah, I can start to see them, Darren, but how do you manage them? And that's the tricky part. That's the part that has to be very personal for you, and how much greed you've got going through your head. If greed says, I'm going for the lows, and you don't get the lows, and it comes back against you, you go, this thing sucks. His technique does not work. I guarantee you it works. It's just that you got you're reaching for too many PD arrays below you. If you're just looking for a simple run back into 50% of that range, here's an example. If you're in on this one and you're coming back into the range, there's 50%, pay yourself there. 62%, move up to 50. Do you get past 60%? Nope. You just tap on it, come back, and it takes you out. Okay. Well, you got in. If you got in here, that's where you use your method to scale yourself out. And you would have made profits versus taking full losses in the next 4 minutes. And you got to be prepared to quickly snatch profits out. This isn't a failure, this not working. It was a failure that you forget that the range that you're in has liquidity that it's providing you. This is optimum trade entry drill, the entry drill, optimum trade entry drill going long. This is the next price leg up. If you're looking at price legs, that's the next price leg. Watch from price leg to price leg, here to here. Price leg done, you're out. So if you catch this, you see this reversal happening in here. Can you get in on it? No, we have another one that trades up in here. Can you get in on that? Nope. Nope. It just kept running away on you. But that's the next price leg. If you start to recognize price legs, then you have an idea where it's headed for. You wait for the next reversal to happen, which is right in here. Trades below it. Do you get a chance to get back in it? Nope. Sometimes you don't get in them. They happen. So this is a 1 minute chart. And we've just showed you a bunch of them. Some of them you don't get in on. Some of them you do. And when you do get in on them, they can pay some dividends, let me tell you. Anyway, so yeah, sometimes I'll go over there and do a trade. Alex, hey, Darren, it's been a while. Alex, buddy, was it something I said? Like, you don't call me? Your mother and I are worried about you, and you don't even call us anymore. What's going on? Cool to see a face cam. Now you get to see the face behind the voice. Friends, let's give Darren a YouTube thumbs up. Please click. This allows us to repay him for his time and efforts. Thanks, Lambo. Appreciate it. Furba, today is my worst day. Oh, Furba, come on. This was too many setups, and in every set price hit, trailed stop loss and went to the target, and I lose. One loss made me break even despite of having multiple good setups. So you have a trailing stop loss. It's a fixed stop loss. You don't have a fail safe. That's okay. 99.999% of the people out there have never even heard of the failsafe. This is just something I came up with. So unless you have a failsafe at a key point, and the other way to know that is to read price action and know where it's going to fail, to put your failsafe in there. And that's really having a clean understanding of what price is doing. Because if you don't, you have to rely on a stop loss, a trailing stop loss, a fixed stop loss. And you're at the will of every little retracement against you. So if you're taking a loss for about, reevaluate, are you following your plan? Do you have a set plan? Do you have it, here's my entry, here's my exit, here's my stop loss, here's where, if it passes by this point, if this fails, I'm out, because I know it's moving in the wrong direction. Because if you put your stop loss down here, you go, I hope it doesn't take my stop loss. Please don't take my stop loss. Please, please, please. You do not have a solid trade plan. In my eyes, you don't have a solid trade plan. Because now you're just hoping that it doesn't go against you. Whereas if you look at this minute by minute, you'll say, if it fails, like when we were looking at this one here, and we're saying, if it goes below my level, like right there, it fails. For me, it fails. Or I go, you know what? I'm going to allow it to go down to the mean threshold of that candle. I'll give it a little bit of wiggle room. If it comes back up again and stays on top of it, I'm good. I'm going long. I give it some wiggle room. Those two candles, like I've explained to you before, those two are your own personal fail-safes. How you work that. If that is not enough for you, and you look over here and go, oh, this is my wiggle room. Check my wiggle room first. Am I going to take it? Am I going to give it some wiggle room here to potentially fail on me? Wait for it to close. Wait for it to close. Okay, it's coming back up. Whew. Okay, it closed above me. Good. Now I'm still bullish again. And it's still going bullish. Okay, good. Now, as soon as I get that objective, or I get this objective or that fair value gap, I'm going to start scaling some money out, moving my stop loss behind me, whatever. So you got to have your plan. If you're constantly getting frustrated, Ferba, because your plan is weak, go back and reevaluate your plan. If you're just throwing money at this all the time and entries, or you're just trying to copy someone, you are going to get so frustrated. You're going to get so disheartened by chasing after price or chasing after my trade or somebody else's trade, because your focus is on money and trying to get that money and then get that little dopamine hit that you get from that I was right, or I followed that guy and I made some money. I'm not here to teach you. I'm here to teach you how to fish, man. I don't want to I can feed you for a day all the time I'm here if you followed the same trade, but I don't want to take that responsibility. And I don't want you to take that responsibility, because then you get mad at me if it doesn't work out. Because I'm willing to go, well, if that failed, you may put too much leverage in there. I can't tell you how much leverage to put on. So you've got to have that trade plan. You've got to have the start, the finish, the fail. All three elements must be there. Where does it start? Where does it finish? Where does it fail? And where am I prepared to change my mind if I see it switch? Because if it starts to move now, you've got to have a new plan. Constantly making a new plan for when that starts to turn against you. And if it turns against you at that point, you're out. It's got to be a flexible plan. It's not just, well, I'll just let it go to R2, R3. Almost hit R3 and came back and took me out. Well, yeah, you missed the freaking turn. You could have maximized your profits even better with a fail-safe. Again, all I know is I'm introducing something new to this multitude of stuff you have to learn. I get it. You don't have to learn it. You just watch me apply it and you'll see whether you like it. And sometimes you get a good setup, Verba, where you say, I'm in, great setup. It's because you're aiming too high, too far, too many PD arrays. And if you don't understand the PD arrays, that's why it's fallen apart for you, because you don't know what to aim for. And you're aiming too high. You're aiming for one PD array too far. It's like the bridge too far in a war, right? You keep trying to run too far, and then you get taken out because you thinned yourself out too much and you missed it. You missed the turn. And it came back, took you out, and you got frustrated. If the setup is good, it's probably because you're not managing it properly on the other end. Corsair joined. Congratulations, Corsair. Welcome, welcome. Brenster, Antor, welcome. Let's see, those guys are all joined now as well. Drogo's giving us another audio file. I don't know what more to tell you here, folks. We got a classic Thursday reversal. Thursday reversal. While I'm at it, I'm going to do my chart. Do you guys like Boris? Boris Viejo? He's awesome. I love his art. Since I was a kid, I used to love Boris's art. So good. Today is swing day? It is. Carve it in. So tomorrow will be another swing day. We're anticipating tomorrow. Another swing day. Okay, 10, 12. It's a daily chart. 9, 8. Oh. If we close in here, this is inside trade day. So we're expecting Friday. Ready? Well, according to my little calculations here, we have a swing day today or tomorrow. Ooh, and then another one on Tuesday. See the swing? There's the fair value gap. We traded below it. We don't get a chance to get in on it. That's where it tells me we're reversing direction. You don't get a chance to get in on it. Oh, well, that's the order block you're keying off of. You lose the mean threshold of it. If you come back to it, you get short. So you get short right there, and you're aiming for fair value gap fill if it hasn't already done it. So if this tapped right here, literally closed, well, I guess it's closed below it right here. So this is the one you're looking for it to run back to, or the next one to run back to. Right there. Let's try a short right there. Oops. We get a short there. There we go. So we have a swing now. What you're looking for is we don't want to see it break this high. We're inside that range. So if I see, so here's my trade setup, my entry, my exit, my plan. If it fails, it's up here. Because if this fails to the upside and comes back to it, then I'm looking for further upside. Well, it might even be this guy here, because there's a small imbalance right there. So I don't want to see it get above that. So my stop loss will go right here. So we're watching this. If this trades above here, then there's your, let's see, here's the problem. There's your breaker right here. Last down close candle inside this little swing point here. that ran above that old high here. Didn't take that whole old high out, but it did take out a previous high, this one here. So inside this range, I've got a discount one and I got a premium one. This is that same kind of thing we were talking about earlier. If we break the premium to go higher, then I'm wrong. If we maintain this one here to go lower and we stay below it, then we're looking to go lower off this breaker. Not a super strong breaker. It would have been nice to break that high. It would have been a stronger breaker. So we'll see if it gives way. This thing right here. If it gives way and I'm wrong, trades back into it, I'll cut my short losses short right here. I want to see this stay below the discount rate. I want to see that one stay open now. That becomes a breakaway gap. Let's see it coming even higher than that now. Too much tapping here. Let's go. Nope. I'm out. That could come back up into that range. So I'm going to watch here now. Or revisit of this. Because remember, we never got an opportunity to get in on that. So this is the reversal to go higher. If we get a body trade above here, you're in between this guy and that guy. Discount, premium. So watch inside this range here. See how we've traded above it right there? Tippy tappy. Right there. Boom. You're in for a long. Don't take the trade. Just watch. Just watch. Because if it trades below this now, then this is my fail safe right here. I got out before it did that because I saw the these tap. It's not acting the way I want it to do. I'm out. So now this is dipped into here nicely. So you've got your full long trade there. Stop loss go down in here for 1%. But if it closes below that right there, then this could be the next price leg down. So we're just going to watch. Because this is where you get to evaluate now whether or not this was a strong breaker or a weaker breaker. For you, you might look at this, go, yeah, you know, it didn't break that high, so I don't know why he's really calling it a breaker. But, well, yeah, technically it broke a high and it broke a high. That makes it a breaker. It breaks these highs. It reverses against them and breaks them, right? So is that a strong one? Is it a weak one? The mean threshold will let us know. We've hit the mean threshold right here. Now we'll wait to see if this is a, see how it's just kind of can't make a decision up or down. It's got to decide where it's going to go. Is this breaker going to hold? Are we going to eat through this candle, get through that little fair value gap you see right there? Pull your fib tool from high to low. You're above 50%. See how we still have not closed below it here? There's 62%. Now you move to break even. If it trades against you, who cares? You're in a tight range. You're not going to lose anything now because you just broke your 50%. Here you hit 60, move to 50%, which you're entering in on. So if it hits 70%, move to 62 and you're already in profit. And you see how it's come right back up into this area here. Watch that right there. See how it's filled this one here? It's reacting off of that. still not giving you an opportunity to get long on that because we've had a body trade below here. Or sorry, get short on that. So now if it hit you 50%, you'd be out and you would have made a little bit of profit. Well, no, you would have been break even if you would have got in there. So you're trying to capture these really 5, 10 handle runs, quickly protect yourself to get out. You got to move your stop loss quick. Otherwise, this closes below here now. Then you're going short again. And I look for this to be the next price leg down. And that mean threshold is holding price. See how the bodies are respecting it? Right there. So that's usually a place to go short. You get off of that to go short. Mean threshold's your line in the sand. If you break the mean threshold, then you probably got more upside. On a close, that is, not a wick. See how now we've closed below it? Now I'm bearish. Off of this, I got confluence. 1, 2. Order block. You want to see that it's been validated, so that's a little bit of padding for you. Yeah, you want to see that continue down. See this give way here. If we lose the mean threshold of that candle, then we're back into, is this still holding price? Or are we going to start to trade back up through it? And all we did was just come back down to this order block because we're really between here right now and that breaker. Well, fair value gap still sitting here too. Just came back and tapped it there. So see how we're at the mean threshold of that candle? Right there. That's why you got to watch price. See it? See the reaction you're getting off of it? That's what you typically want to see. Now you want to see this mean one. So now you're between this candle and this candle. You want to see this one give way. It's not a breaker. It's just a regular order block because it never, well, I guess it would be mitigation because it doesn't actually break an old high. So you want to see that one give way now. It's a weaker mid-level candle. And we saw the change in direction right there. As we saw the change in direction here, it ran up into a premium array. Pull your fib tool, you'll see. Ran up into a premium array and then reversed and changed directions. And it told you it reversed directions because it broke through. For me, it broke through there. And now I look for, okay, now is this holding and is that holding? Which one's holding? Do you want to be in the middle of that? Do you want to trade on that? Hell no. You're in such a tight range now. You're just looking to get your ass handed to you one way or another. I don't know which direction it's going to go. Right now, I'm still bearish because I haven't got proof to the upside yet. And when I get a run above here, then I'll change my mind for a premium array. And I'll go like array to like array. And there's another one that's in a premium just up here. I'm happy as well because my plan was right. Yes, Furba, good for you, buddy. I knew that. Maybe this time I don't become profitable due to break even, but maybe some other day. You know what? Break even is profitable because you didn't lose anything. You get to keep your little shekels in your pocket, my friend. Right? Is SPX mini, SPXE mini is called SMT between NQ and SFX? No idea what you're saying, my friend. No idea. Maybe somebody else can help him out. Sell limit at 18,310. Yeah, that's a premium array, 18,310. So you just catch this reversal here. Ideally, 18,311 would have been my my choice for a reversal. Still didn't get it, but we're still bearish. That mean threshold is still holding price. And the fact that you're through the mean, you've clicked into the mean threshold of this candle now, you're between this one and this one. Mitigation versus breaker versus mitigation. And they don't all, the breakers don't always win. So we'll see mean threshold of this candle again. See how it's getting, it got tapped once, got tapped twice. So it's getting chipped away at, chip. Now we're all the way through it into the rejection block. I'm just going to snap back now, and I tried to get down. I can't get down. Try to get up. More resistance trying to get down than up. Look for a run back up into here and here. I still like this as the potential. So it would be like one of these shorts right there. Again, you're going against the trend. You're counter trending this, so be careful. Higher time frame says we've got more stuff above you than below you. All that stuff below you is chatter for next week, I think. Unless tomorrow's the big day. It's tomorrow's 10 day. 15 more. Oh, there you go. Now we're up in there. Now I want to see it start to, now you finally got that validated. See how we couldn't get in on it here? You couldn't get it there. Now it's giving you an opportunity to get in on it. Let it rip. Now I would have that sucker pulled right into a break even. I wouldn't even want that to come back up there. Now I want to see it just get down in here, start paying yourself and moving like into profits right away, because you're in a tight little range here. So grab some money out here and just move it to your break even. 50 bucks, who cares? Not that you'd actually take that trade, but if you did, you're in a consolidation. So premium, discount, you're right in the discount range now. If you bought it at a premium, sell it at a discount, move to the sides, and high five yourself for rolling the dice a lucky 7. See the consequent encroachment? You just get a snap off of it like that. Areas of sensitivity, man. If it runs through it now, it's okay. But I just love that it taps on it. Now, if it takes off up, keeps going north, I go, great. I can see why. It hit that area of sensitivity, mean threshold of that candle, left that open. Good. Carry on. Go higher. Now, aren't you glad you paid yourself down here and you moved to break even and moved it a little bit into profit because you just got taken out? If it runs all the way up here, unrealized profit you didn't take because you don't know how to trade inside a consolidation or a premium or discount range. That's when you really start to play with price action and you're on the hot seat. You're running through the kill zone in your underwear. Guns a-blazing, hoping that you may get your trade. Okay, I got 15 more minutes here. Then I'm checking her out for the day. This is when you need Derek in here to kind of give you your afternoon run, the afternoon macros. So yeah, go to your, and again, there's more of these social media sites. I know you guys have a million social media sites that you're in, but if you like what we're doing here and you want to participate in it, unfortunately, we have our little cluster of social media sites we have as well. So Breakfast Club, on the weekends, sometimes I'll do a Breakfast Club and I'll post it on the link to the Telegram channel. If Derek does his afternoon channels. He does them in Skype as well. I think it's Skype. Yeah, Skype. So he'll post the link in there as well. So you can join in on that or not. You know, if you've had enough of this stuff. I get there's not a lot of people that love this stuff as much as we do. But you'll see his link there. And you can pop in on his show. And there you'll see that he set up a list today of the 5 things that you should do or to keep an eye on for the 315 to 345 macro, end of day macro. So I encourage you to go there, and if you've got a link to his site, I'm not posting a link to his stuff because he'll post his link to his own channel. Go in there, you'll find the information for what he looks for, and then because he won't be here this afternoon, he's doing some golf and stuff. Keep that in mind when you're looking at the 330 or 315 to 345. Follow his rules there. Look for the setup and just watch it and just play it out. See if you can actually see it as it happens, see it unfold as it happens, or if you see it, how many candles later did you finally see it unfold before it finally went in the direction he talks about. See how we've traded above this now? That's the swing point. So you're going bullish, then you go bearish, now you go bullish. See consolidation off of this, bullish, bearish, right? So now you're going bullish again. You've come back to it right there. Now you go long. Where am I aiming for? Premium array up here. And that when you're going long here, when it finally traded above you and you went long there, and you go, it traded below, do I get out? Well, here's your wiggle room if you're into wiggle room stuff. But when this was a bold candle going down, did you chicken out? Did this candle sucker you in and get you to break your rule? That candle right there would have caused some people, because it traded through it as a bold candle all the way there before it finally came back. And that right there was the squeeze. Did you snap under the pressure of that candle? If you didn't, good for you. You run for your internal range of liquidity, higher time frame, a higher premium array, like array to like array. You're out. In a breaker, mitigation really, parent breaker, I guess. Run through that thing. So now you got a new high. So now you can see why that's the run up from there. And it's confirmed again right there. Come back to it. You get one more opportunity to go along there. So if you got taken out there, if you did follow Darren's rule of, you know, if the body trades below it, I'm out, and you didn't give that wiggle room, but it still stayed above that, then traded above here one more time, came back, and went, okay, now I'll catch it long. You've just made back all the losses you got here for the run to your objective. And right now you're bullish. Nothing changes because now you're above this candle as well, this reversal. See, the body's above it. It traded above. So if you were wrong, you had an opportunity to get out if it didn't take your stop loss right. Ooh, what's the high on that candle? High is 13 or 15.25, and this one is 21. So it would have taken you out. So that's an example of if you were going short right there and your stop loss was right there, that's where the full run through takes you out. And you go, okay, you got me. Sometimes it takes you out. Sometimes you get the opportunity for the fail safe to give you a chance to get back in. I don't think I like it. You know, sometimes you get a tan and it's nice. My skin feels like leather. Usually I have pretty soft skin, like leather. Got burned up pretty good down there. SPX is index of SPY, E-mini SPY, ES for June contract, ES 24. Thanks, Jack. Ah, okay, that's what he meant by SPX. SPY, yeah. So I hope that answers your question there, Verba. Thanks for that, Jack. Thanks for helping him out. All right, I think that's going to be it for me. We're consolidating here and potentially more upside for this afternoon. Again, a potential to run all the way back down into yonder candle. If we see a big pump down here into this level right there, look for this again. If we end up coming down into mitigation, what's really down here? There's nothing that shows that. What is it? Where does the mean threshold put you? So I tend to go for here and I go, what's sitting at the high right there? Oh, there's a little fair value gap sitting right here. Then I go, where's the open? The open is sitting right there. So that's the fair value gap. Then you go, where's the mean threshold? What's sitting down in here? Nothing much, just a revisit of the fair value gap that's here. It's not an inversion there, it's just a revisit. So if we get a lunch hour retracement, take out these guys again before going higher. Look for the hourly high, rejection block. Also look for is this the New York Open? No, what is that? Oh, that was the mean threshold, the 50% of that range, wasn't it? I don't know what that one is. I think it might have been the 50% of the regular trading hour gap. Anyway, look, if it does come back looking for a return into, this is a reprice rebalance. So yeah, you're still getting into these old highs back here. Bodies. Not sure. I don't have a solid answer for you. In terms of the afternoon stuff, don't know. Rejection block again. See how you take this one out, but you didn't take you're still inside this rejection block. You're in it here. You're in it again here. And it's retracing. Frustrating the people that want to take that high out. Hate yourself at rejection blocks, people. Okay, that's it for me. I'm going to go and have some lunch. This fasting stuff's killing me. I'm just getting hungry now. Gotta get angry. That's it for me. Thank you so much for popping in again, you guys. You can catch me on Telegram if you want to have, if you have any questions. If you have any questions of the other guys that are in there. There's tons of really smart people in there to help you out better than I can. We've got lots of different knowledge sets in there. There's people that love bonds. There's people that trade on ST or SMT divergences, and there's some really smart people in there. I'm so happy to have a community of people like that there. And we're up to like 134 people or something in there right now, and they're amazing people. And that's the kind of people we want. So if you're coming in just to smash and grab, and you're rude in any way, you're gonna be gone. You'll lose your opportunity to share a great group of people. If you're mean in any way, you're gone. I don't tolerate that at all. We don't expect that. We expect you to be in there and help people. Give more than you get, and you'll feel a lot better about yourself. or maybe you don't, I don't know. But either way, pop in. Everybody's welcome. You have all the respect to lose. Everybody respects you. They respect everything about who you are, where you live, what you do. Nobody cares about that stuff. We just respect you for who you are and your beliefs and everything else like that. That's great. Don't be disrespectful of other people's stuff, and everybody will get along swimmingly. Absolutely swimmingly. So we have a high taken, swing point, body trades below it. You don't get an opportunity to get in on it. If this breaker gets taken, look for a trade back to the breaker to get short, and look for that order block down here again. So just kind of keep those things that thing in mind. And you want it to close below that, by the way. So yeah, I'll see you guys in the Telegram chat, and I will see you guys tomorrow morning. Thank you so much again for tuning in. I love you guys. Thanks so much. 616 people we've got subscribing. That's it always boggles my mind how many people pop in and subscribe. So thank you for all the likes. Thank you for all the time that you've spent with me. I know you have plenty of people out there to choose from, and I appreciate you guys spending time with me today, and I will see you guys tomorrow. Thanks very much for tuning in. Have a great day. Go spend some time. Go get in the sun. Hug your kids. Go play with your pets. Hug your family. Be kind to some people out there.